twaomba uilinde Jumuiya Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Asanteni sana. While you're still remaining upstanding, let me invite on stage Stella Washira to take us to the Lord.
Let us pray. In the name of the Father, and of the Son, and of the Holy Spirit. Amen. Almighty and everlasting Father, we come before you this morning. We give you thanks and praise, Father, for the gift of life and the gift of this day that you have given unto us. For we know it is by your grace that we are here. Father, we commit this KenGen SRBS AGM meeting into your mighty hands. We trust and believe, Father, that it will be a successful meeting. We commit our Board of Trustees, our sponsor, the Secretariat, and the fund managers, Father, into your hands. We pray, Father, that through the guidance of your Holy Spirit, they will be able to make wise decisions and have the proper knowledge that is necessary to invest the funds and entrusted to them by the sponsor and by the employees. Father, we commit all the employees here and the retirees present, and also those employees and retirees that are joining us from their different regions. We entrust their families unto your mighty hands, asking you to protect them and be with them wherever they are. Father, we commit all this into your mighty hands, entrusting it unto your Son, our Lord Jesus Christ, who lives and reigns with you and the Holy Spirit, one God, forever and ever. Amen. In the name of the Father, and of the Son, and of the Holy Spirit. Amen.
I want to invite James Gitonga to come and give us a safety brief.
Our MD and CEO, General Managers, Board of Trustee, Chairman of both DB and Scheme, the CEO, my pensioners, DB members, good morning. Okay, can we give a high five? Yes. Yeah, the reason I gave you. So today marks a great day. Safety is one of our core values for our company. We protect and take the well-being of our employees. The reason I told you to greet your neighbors, they will be your brothers and sisters keepers for this session of the GM. The reason, the location we are here in is the KenGen Pension 2, lower floor. We have 2 emergency exits. On the left is this is the designated, and also you can walk through. So also we don't anticipate any incidents. However, we have trained emergency responders, fire marshals, and first aiders. Fire marshals, please can you stand up so that the audience can see you? The fire marshals in the house, can you wave? Thank you. So in case of anything, feel free to reach those people. So for the critical areas, we have reserved washrooms for our trustees. You just exit on my left, then you go upstairs. For the members, pensioners, and other invited guests, we also be having, you can just go to the 5th lower level where you'll be able to check. So for any smokers, this building is not designated smoking zone, so we don't anticipate any smoking. In case of any medical facilities, we have our adjacent Stima Afya Clinic, and within the vicinity, we have Pisha and Aga Khan. Also, for our KenGen employee, in case of anything, you can activate your staff, the Swift Response app, which you have installed in your phone, and the board security you'll be able to take. So for the assaults, the potential assaults in the room are tripping. However, you have provided some cable protectors, so in case of an emergency, you will not be able to do. However, as you are walking within the trail, there is that potential Also, when you are taking your breakfast, you can have that aspect of food choking. And also, as you are climbing through the stairs, we can have some trips and falls which can cause some hazards. So in case of fire incidents, when an alarm sounds, I would propose all of you leave this venue. Then we need to walk briskly to the stairs. Please, you are advised not to use the lift because there can be a sense of commotion. You need also to cooperate with the fire marshals so that they can give to you. In case you have any respiratory problems due to the chilly weather, please keep your inhaler. Then, as you are walking down, please don't be tempted to detour to your offices. We have a designating assembly point next to our Parklands Primary School. So don't come back to your offices unless you are given a safety clearance by the OSH committee and people. So for security, enough security has been provided for this session. However, we are there to you to keep your personal and be vigilant. Thank you and enjoy your session.
The GM in charge of corporate services, making her very first speech since she was appointed. Oh, not appointed, promoted. Karibu, Beatrice.
Thank you, Frank. Good morning, everyone. Chairman and members of the Board of Trustees of the DB and the DC schemes, the Managing Director and CEO KenGen, Engineer Peter Njenga, our guest speaker, Dr. Edward Odundo, the representative from the Retirement Benefits Authority, service providers, KenGen staff and pensioners, ladies and gentlemen, good morning. Good morning once again. Even those online, good morning. I hope they are attentive there. It is my great honor and pleasure to welcome you all to the annual general meeting of the KenGen Staff Retirement Benefits Scheme and the KenGen Defined Contribution Scheme being held here at Central Office. As many of you may know, this AGM has over the years been hosted across various KenGen stations, a commendable and inclusive effort by the scheme to bring governance closer to our members throughout the country. This year, the privilege to host has been passed to the Central Office, and we are indeed honored to welcome you all. Where are the Central Office? I don't know, there are so few, and I'm wondering why they have not come. Yes, you are here. Okay, that's good. Let's appreciate them. Allow me to begin by acknowledging with sincere appreciation the presence of our key stakeholders and guests. The first one is the Board of Trustees of both the DP and DC schemes who continue to steer the scheme with diligence and foresight. And you can all see them dressed very well. Can we appreciate them? We appreciate you. Appreciate you very much. The Managing Director and CEO of KenGen, Engineer Peter Njenga, whose presence affirms the strong support that the sponsor consistently provides to the schemes. Can we appreciate our captain? We appreciate you, Captain. Thank you so much. Our distinguished guest speaker, Dr. Edward Odundo, who is in the house, former CEO of the Retirement Benefits Authority. We are privileged to have you with us and look forward to your insight. Karibu sana. Let's appreciate again. Karibu sana. Maybe you can stand. Can appreciate you. Thank you. Thank you. Thank you so much. Mr. Bosco Kicheo, representing the Retirement Benefits Authority, we thank you and the authority for your continuous regulatory oversight and support. Can we appreciate again? Please stand, we appreciate you. Karibu sana, we appreciate you. Our friends and colleagues from Kenya, the Kenya Power Pension Fund and Stima Sacco, we are delighted to have you with us. Can we appreciate Kenya Power? Do we have them in the house? Yeah, Kenya Power Pension Scheme and Stima Sacco. Stima Sacco, let's appreciate. Maybe they are online. Let's appreciate them. Our scheme service providers, we thank you for your dedicated support and expertise. All KenGen staff and pensioners joining this meeting, both physically and virtually, your participation is in large numbers is deeply appreciated. Today's AGM is an important opportunity to reflect on the performance of the schemes, engaging openly on key issues, and hear directly from our trustees and service providers. The AGM remains a cornerstone of accountability, transparency, and members' engagement, and we are proud to uphold that tradition. It is also a time to appreciate the progress made, the resilience of our investment strategy in an evolving environment, the continued growth of membership, and the innovation aimed at enhancing the member experience and retirement readiness. As hosts, we hope that today's meeting will be both informative and productive. And that is to reflect the professionalism and warm hospitality that we at Central Office take great pride in. I hope you have enjoyed our warm welcome. I'm happy to see our retirees. KenGen is a good company, and anytime we release someone on retirement, they come back looking younger than they were. They even look younger than us who are still in service. Can we appreciate KenGen for that? Of course, led by the CEO. Thank you for making this company attractive and taking care of the pensioners. Because if it wasn't for the support of the company, KenGen, these men and women would not be looking like the way they do. And so we really, really appreciate and welcome you to Central Office, and I hope you'll have a good day today as we listen to our trustees telling us the wonderful things they have done. They've taken care of our fund. They have made the fund grow, and we know today we are going to receive good information. So with those few remarks, I once again extend a heartfelt welcome to each one of you. Let us look forward to a meaningful and successful AGM. Thank you, and may God bless you all as you continue this AGM. Thank you so much.
Chairman, speak to your people.
Good morning. This is the 25th annual general meeting of the scheme. Good trustees and industry stakeholders, it is both an honor and a privilege to welcome you to the 25th annual general meeting of the KenGen Staff Retirement Benefit Scheme for the year ended 31st December 2024. On behalf of the Board of Trustees, I wish to sincerely thank each of you for making time to join us, whether physically or virtually from across the country or elsewhere. Your presence today is testimony to your unwavering commitment to the continued growth, governance, and integrity of our scheme. As introduced, my name is William Rahedi. I have the honor of serving as the chairman of the Defined Benefit Scheme. Before we proceed, allow me to extend special recognition to a distinguished group among us. Our newly retired members who are joining this annual general meeting for the very first time in their new capacities as senior citizen in retirement. Karibu sana. Regrettably, the scheme has lost some active members during the year. Today, we also remember them and continue to pray for their families. Let us stand for a moment and make that recall. May I now call upon the Trust Secretary to advise if we have a quorum to continue with the meeting.
Thank you, Chair, and good morning, members. Chair, we have this being a hybrid AGM. We have members joining physically and others joining virtually. For physical members, we have 128 active members and 21 pensioners or retired citizens who are with us. And for virtual attendees, we have 955 members. Chair, we are collated and we should be able to proceed with the meeting. Thank you.
Trust Secretary. A quorum hence being formed, I declare the meeting to be properly and duly convened. Today's AGM is hybrid, whereby attendance is both physical and virtual. Therefore, we shall have to have a few ground rules for all of us to effectively participate. One, for virtual attendees, we have a chat mode that will be running through this session. You're encouraged to raise your questions and comment on that platform. Our team from the Secretariat will be responding to the queries raised and will also be addressing some of those questions during the Q&A session later in the program. For those present, we shall pass the microphones around for you to share your questions and comments. Please prepare them. And 3, we can also channel your follow-up questions and comments through our email address designed for this purpose, the AGM at KenGen SRBS.co.ke. To engage with you, we shall also be running polls during the session and encouraging you to participate once it's open. For those attending the AGM physically, printed poll questions have been issued to you together with the audited financial statements. Please fill out the same and then drop the questionnaires at the registration desk located at the entrance when you came in. Any assistant, kindly reach out to our ushers. And at this point, I'll ask the Trust Secretary to share the first poll.
Thank you, Chair. And members, we carry out these questionnaires as a way of ensuring we gather more information from members as we try to continue improving our services. So, Chair, the first query is to our members, and I read as it is. Do you feel adequately informed of the various regulatory changes taking place within the retirement benefit sector from time to time? Do you feel adequately informed of the various regulatory changes taking place within the retirement benefit sector from time to time? You either yes, no, or somehow informed. These are changes on taxes, changes on contributions, changes on your benefits, or changes on all those changes that happens within the retirement benefit sector. And I read the question again. Do you feel adequately informed on the various regulatory changes that take place within the retirement benefit sector from time to time? Questions, answers is yes, no, or somehow informed. Chair, good participation from members who are attending. And from there, we can confirm that 51% of our members feel adequately informed of the regulatory changes that takes place within the retirement benefit sector. We still have a big number of 18% of members who feel that they are not informed at all. And we have members who are 50-50, feeling about the information they get about the changes within the retirement benefit sector. Chair, this will guide us as we do our member education and as we guide members on various changes that will be taken from time to time. Thank you.
Members, I'm privileged to serve in the board with a team of dedicated trustees. Kindly allow me to introduce them to you. And as I introduce them, please indicate who you are by waving or standing. As I had earlier mentioned, my name is William Rahedi. I'm nominated by the sponsor KenGen PLC. It is also my honor to acknowledge the presence of the Managing Director and Chief Executive Officer of KenGen PLC, Engineer Peter Njenga. Sir, we deeply appreciate your attendance and your unwavering support that KenGen has given the schemes. As the sponsor, continue to extend the scheme's ability to run effectively. Your presence here today reaffirms that commitment. And we shall give you a moment to address us later on. And we also have a very special guest, a man who has had a very strong bearing on how the industry has developed in Kenya, Dr. Edward Odundo, the Director of the School of Pension and Retirement Studies, and former CEO of the Retirement Benefits Authority. Kindly just wave to the members. We'll give you a chance to address us. Now, I'll ask the CEO and Trust Secretary to introduce to you his management team.
Chair, I might call some, and some are all out there and ensuring that the AGM learner is expected. So I'll just go through the list of the various head of departments. And these are the team that ensures the scheme continue performing well. We pay members on time, and also we have good and better returns each and every time. So on pension department, it's headed by Purity Kamau, supported by Albert Anam and Doreen Wairimo. Investment department is headed by Hannah Ngohi. Finance department is headed by Nicodemus Kipto, supported by Rashid Kanywa and Silvio Malaka. ICT department is headed by Jeremiah Gishiri, supported by Lawrence Pascal. They are our host for the meeting today. Property department is headed by Anthony Mangeli, supported by Francis Maina. Hishara and admin department is headed by Masi Muhandia, supported by Jane Namnyak, and executive assistant Grace Kimani. Thank you.
Thank you, TS. I now request the Trust Secretary to read, and incidentally, we have total confidence and faith in this secretarial team. I now request the Trust Secretary to read the notice convening the meeting.
Thank you, Chair, and I will read this notice. It was shared on time and shared on with the members on 5th of June 2025. That is 21 days before the date of this AGM. So I'll read as it is. Notice is hereby given that the annual general meeting of KenGen Staff Retirement Benefit Scheme, largely known as DB scheme, to be held at KenGen Plaza 2, 6th floor parking area from on Friday 27th June 2025. The theme of the AGM is charting the course from progress to possibilities. The meeting is supposed to start at 10 a.m. and the agenda for the meeting is as follows: to read the notice convening the meeting, to receive the chairman's report, to receive fund manager's report, to receive the custodian's report, to receive the scheme audited financial statement for the period ended that 1st December 2024 together with the auditor's opinion, to receive remarks from RBA. Then we'll have the plenary session, any other business which has been received in due notice, and then to receive the closing remarks. This is a hybrid AGM where members from Central Office and pensioners within Nairobi region will be expected to attend physically, and other members and pensioners are joining us virtually via Zoom webinar. This was issued by the order of the board, signed by myself, Josephat Muriuki, the CEO and the Trust Secretary, on 5th of June 2025. Thank you.
Now we go to item number 2 on the agenda, which is to receive the chairman's report, which is the report of the trustees. To our esteemed members and stakeholders, it is my privilege to present the 25th annual report for KenGen Staff Retirement Benefits, marking the silver jubilee in our journey of securing dignified retirements. This milestone calls for reflection, resolve, and renewed purpose to uphold fiduciary responsibilities and stewardship of the scheme and amid shifting demographics, economic transformation, and regulatory developments. The macroeconomic landscape and strategic resilience. In 2024, Kenya's economy recorded a 5.1% GDP growth, supported by improved performance in agriculture, manufacturing, and services. Inflation eased to 4.5%, and the Kenya shilling appreciated by 21% against the US dollar, its best performance in a decade. The S&P Kenya Sovereign Bond Index rose by 29%, while the NSC 25 index surged by 42.9%, reflecting a market-wide recovery. Despite volatility, the board remained committed to long-term strategy over short-term reactions, emphasizing governance as the cornerstone of sustainability. Midterm strategy review, Horizon 1, 2019 to 2024. The scheme successfully concluded Horizon 1 of the 10-year strategic plan. Under Pillar 1, the fund value reached Kenya shillings 9.714 billion. and the 1 year held to maturity return was 17.46%, which was driven by strategic asset reallocations. Pillar 2 saw operational excellence through maintaining administration costs at 0.8% of assets under the management, and full integration of the ERP and electronic document management system. Under Pillar 3, the scheme implemented job evaluation outcomes, conducted annual performance reviews, and completed the midterm review of our strategy and governance frameworks. Regulatory alignment, DBO practice, not implementation. In 2024, the scheme fully adapted the Retirement Benefits Authority's practice note on defined benefit obligations. This included operationalizing requirements related to benefit calculation, governance, member options, and communication strengthening, transparency, fairness, and accountability across the board. Legislative reforms, Tax Law Amendment Act 2024. The scheme welcomes the tax reforms passed in December of 2024. Key changes included an increase in tax-deductible pension contributions to 30,000 Kenya shillings per month, tax relief on post-retirement medical fund of up to 15,000 monthly, and pension income exemptions. Those reforms are significant, both to member savings and scheme efficiency. ICT transformation and risk management. Following board approval, the ICT strategy is now fully operational. This marks a significant step forward in our digital transformation journey. Among the major achievements included are the successful upgrade of our enterprise resource planning and electronic document management system, the strengthening of our cybersecurity framework, and the launch of a toll-free service line to enhance member support and accessibility. Enhanced MIS reporting now supports both decision-making and regulatory compliance. I'm glad to report that risk oversight remained robust, with ongoing monitoring of investment, operational, and compliance risk. Recognition for reporting excellence. In 2024, the scheme was honored as second runners-up in the pension not-for-profit category at the FIRE Awards. This accolade highlights our continued commitment to transparency, quality reporting, and strong governance standards. Member experience, profile engagement, and payouts. As of 31st December 2024, the scheme had 18 active contributing members and 1,277 pensioners and beneficiaries. Over the course of the year, the scheme paid out 912 million shillings in benefits paid in the prescribed structure, 1/3 as lump sum and 2/3 to secure regular pension income. Our member education expanded to 12 sponsor stations with increased participation in pre-retirement briefings and onboarding, while the AGM attendance rose by 35% to 1,888, reflecting a growing member engagement with the scheme. Pension increment post-1999 service. In line with the provisions of the trust deed and rules which cover post-1999 service, the scheme allows for a review of pensions in payments, subject to the assent of the sponsor and consultation with the actuary. I'm pleased to report that following this process, a one-off 3% pension increment was awarded to eligible members in August of 2024 and paid in arrears. This decision was guided by the actuarial valuation conducted as at the end of 31st December 2023, which assured the scheme's funding position and investment performance. The results of that valuation continue to guide the trustees and sponsor in ensuring that any adjustments remain sustainable and aligned with the long-term financial health of the scheme. Looking ahead, strategy and purpose. As we transition into Horizon 2 of the strategic plan, our focus will shift to asset de-risking, continued digital transformation, and enhanced member service. We remain committed to proactive risk oversight, adaptive governance, and operational excellence as we build a resilient future for the scheme. In closing, I extend my deepest appreciation to the Board of Trustees for their visionary leadership and to the regulator for continued support and guidance. Special thanks to our sponsor, the Secretariat, service providers, and most importantly to our members. Your trust and commitment drive our shared mission to deliver retirement with dignity through prudent stewardship and forward-looking governance. Thank you. We shall now give opportunity to our professional service providers to present their annual reports, which will reflect also in the annual report that has been shared with you. And to start us off, I'll ask Don Gathogo from Sanlam Asset Managers, who will present the fund manager's report.
Thank you, Chair. Board of Trustees of the DB and DC schemes, fellow service providers, member of the schemes, good morning. As has been introduced, this is the fund manager's report. My name is Dan Gathogo. I'm about to share a joint presentation that has been prepared by Sanlam Investments and Gen Africa Investments. We were the fund managers for the period that ended in 2024. So the presentation is a three-part presentation. One will talk about the role of a fund manager. We'll talk about the investment climate in 2024, as well as an update for 2025. And the third part will look at how the scheme was invested for that period, as well as an outlook for performance. So if you look at that first slide, we start with the role of a fund manager. Key among our roles is that we advise the Board of Trustees on how to invest, how to go about investments. We are guided by the Retirement Benefits Authority, who generally regulate all pension funds in the country. Under RBA, pension funds are generally allowed to invest under those 4 asset classes that I will briefly define. We have what is called fixed income, equities, offshore, and alternatives. And the DB scheme was invested in all those asset classes. So under fixed income, we have interest-bearing securities. And the key investments under fixed income are like treasury bonds, treasury bills, deposits. And your scheme is a big investor in that particular asset class. We have what is called equities. Equities is investments in the stock market. Again, your scheme has invested in stocks. Stocks is a very volatile asset class. It has years where it does well, years where it's really affected by what's happening, with regards to the economy. But for the period that we're speaking about, 2024, equities did quite well for that period. We also have what is called offshore investments. Offshore, members, is investments that are domiciled outside East Africa. Again, your scheme has a portion that is invested under offshore. And we have what is called alternatives. And on the alternatives, we have investments like property, private equity. And again, your scheme has invested in property, for that period in 2024. As fund managers, we also require to invest the scheme assets in accordance to a document that is called the Investment Policy Statement. This is a document that is drawn by the Board of Trustees, and it more or less guides how investments should be done. It gives a guide, it gives a maximum and minimum limit on investments that should be done in a particular asset class. So as fund managers, we are required to make sure that we comply with that particular document. We also report to the Board of Trustees on the scheme performance. And members, I'd like to confirm that we meet with the Board of Trustees every quarter, and there's a lot of deliberation in these meetings. We deliberate about strategy, about performance, for the betterment of the scheme, and also required to report, returns to the RBA on a quarterly basis. In the next slide, we look at, the economic performance of, the investment climate in general. And in this slide, we look at GDP growth. The brief of that slide is that our economy has generally been if you compare to history, has generally been doing okay. Returns, GDP growth has been growing by about 4% for the last 2 or 3 years or so. And much of that growth has been driven by agriculture, the agricultural sector. We've had good rainfall during that period in 2024, and that really boosted economic growth as measured by GDP during that period. And that can be reflected in the investment returns that we'll share later on. If you look at inflation, members, again, as a reminder, inflation is how the prices of goods and services increase. Inflation has generally been supportive for investment. If you look at that graph shows a trend of inflation from 2019 to present times, 2025. The brief of it is that in 2024, inflation really came down. At some point, we had inflation at about 3%. And that compared well to investment return. When we look at investment return, we'll see that the scheme's return was 16% as at the end of 2024. And with inflation at about 3%, 4%, that more or less indicates that what we call the real return was actually quite strong if you account for inflation. So inflation has been supportive, and inflation has done quite well for that period. In 2025, again, inflation continues to be quite moderate and at good levels at about 4% thereabouts. Currency, the next slide. The trend of currency is normally quite important when it comes to investments. It really influences, how investments, perform. For those who've been following financial news, there's a time in 2023, beginning of 2024, the Kenya shilling against the US dollar had hit 160, for those who can remember. There was a lot of hue and cry, if you remember. The prices of goods, had really gone up. As a country, we import, a lot of goods. And with the currency hitting 160, that was, we saw, that price of goods increase significantly. At the beginning of the year, we saw the government and central bank intervene to try to stabilize the shilling, and those efforts were successful. What we saw central bank doing is that they increased interest rates in the country. And the rationale for increasing interest rates was to make our fixed income securities, that is our treasury bonds, our treasury bills, quite attractive for foreigners. So at some point in February 2024, we saw the central bank issue an infrastructure bond at 18%. And that was quite attractive. We saw a lot of foreign money coming into the country. That foreign money comes in US dollars and has to be converted into Kenya shillings. And, that money came in huge droves in the month of February. And we saw the Kenya shilling have a lot of demand. And the Kenya shilling strengthened from about 160 to about 129 shilling. And since then, we've seen the Kenya shilling stabilize at that sort of level. But the point to note there is that the shilling appreciated significantly in 2024, and that did well for investments. And a lot of that was because of some of the interventions that we saw from central bank and the government. And if you look at fixed income is generally, and the slide that I've showed there is how treasury bonds performed at the Nairobi Securities Exchange. The return was quite strong. If you look at the graph on your far right, that was a return from treasury bonds in the year 2024. Quite strong, at 29.3%, as the chair had mentioned. Again, that return was generally because, interest rates were quite high at some point at the beginning of the year. And, interest rates came down and we saw a lot of good revaluation. But good, positive return from bonds was reflected for 2024. And that reflected in the funds, investments, given that bonds is a huge part of what the scheme has invested. In 2025, and this is an update for this year in 2025, we continue to see good bond return. The investment environment is, quite positive. The in return as at 5 months, from January to May, this 2025 is at 9.9%. So if this continues, and we project that this will continue, we project that return for the full year in 2025 from fixed income or treasury bonds will be north of 15%. So we expect, good return from bonds in 2025 as well. If you look at equities, the return was, next slide please. If you look at equities, again, the return was quite strong. I'll draw your attention to the blue graph and the graphs in the middle. That's for the year that ended in 2024. As you can see, those numbers are quite strong. Equities, that is investments in the stock market, performed very well, up by 34% in general. And that was good return. We've not seen such good return in a very long time. And again, the scheme has invested about close to 8 to 10% of its assets in equities, and that portion did quite well. We saw a lot of recovery in 2024, given poor years in 2023 and in 2022. In 2025, again, good news, we continue to see good return. If you look at that graph, the return up to May was 8.6%. So we continue to see good return from the stock market, driven by the good investment climate that we are seeing. The only asset class that probably had lackluster return last year was offshore. If you look at that graph in the middle, 2024, again the blue bar graph, offshore, the return was minus 3.7%. And generally this was because of currency. So offshore return are investments outside East Africa, and these investments are generally done in US dollars. So we had invested for the scheme in investments in the stock markets in the US and in Europe, and the stock markets did quite well. The return was about 18%. But when you look at offshore return, you look at the return is two-pronged. It's the return from those markets as well as the currency return. Because remember, the investments is in US dollars. So for that period that ended in 2024, we've talked about the fact that currency appreciated, our Kenya shilling appreciated. That translated to what we call a currency loss for offshore return. So the markets were up by 18%, but the currency translation loss was 21%. The net return was about minus 3% for that period. But the good thing is that it's only less than 2% of your fund that is invested in offshore. So yes, the return was negative, slightly negative, but the exposure to your scheme is quite small, at less than 2%. For this year in 2025, we see positive return. So far up to May, offshore return is up by 4.2%. So as I wrap up that section on investment climate, in brief, in 2024, the markets did very well, especially local assets, that is equities and fixed income. And the large part of your fund is invested in those local assets. And, your fund really did quite well because of having that exposure to that asset class. So having said that, I'll go to the fund, how the fund was invested in 2024. So if you look at that graph is called the asset allocation graph. It more or less, it's a pictorial presentation of what you have in your financial statements. It shows how your scheme was invested. So 47% of your scheme was invested in bonds, treasury bonds, and that portion did very well in 2024. 42% of your fund was invested in property, 6.4% in equities, about 1.7% in offshore, and 1% in deposits. So that is how your fund was invested as at the close of 2024. What you can see in the blue bar, in the blue bar graph. And again, just to mention, bonds, equities, deposits did very well for that period that ended in 2024. In terms of performance, I think I'm struggling with projecting the slides. Just wanted to go to the next slide that shows performance. This is a slide on performance. Performance, as you can see, if you look at 2024, on your extreme right, performance was quite strong. If you compare to the previous years, that's the best return. And that, again, just to allude, was because of the good return that we saw from treasury bonds and that we saw from equities. So the overall scheme return, when you consider property, when you consider all asset classes, was 16%. Quite strong return, and the scheme did well. Now in 2025, as you can see, we've shared an update for the scheme return up to May for the first 5 months. Again, that scheme return is quite strong at 7.8%. What we are saying is that we also expect very good return in 2025, again reflecting the good investment environment that we've seen for that period. So as I conclude, it's just to mention, that's a busy slide. It's just an outlook for 2025. You've seen the numbers so far for 2025. Return is about 8% for the first 5 months. We project that the full year 2025 return will be strong, just like 2024. The investment environment is looking quite good. Fixed income, equities, and offshore are doing quite well for this year. So that's a brief. I think today I'm a bearer of good news, good returns in 2024, and expected good returns in 2025. So with that, we'll take your reactions for that presentation during the Q&A section. Thank you, and I'll hand it over back to the TS.
The chairman, DB scheme, Mr. William, the MD and CEO of KenGen, Engineer Jenga, Board of Trustees, members of the scheme, all protocols observed, Good morning. My name is introduced is Purity Huha. I represent NCBA Bank, your fund custodian, and I'm going to take you through a brief presentation of the custody report. All right, members, I'll take you briefly through just what we do, our role as your custodian. I'm also going to be confirming assets under custody for the period that we are reporting. I'll take you briefly through the risk control measures that we've put in as your custodian to just ensure that your assets are safe with us. So starting off with our role as your custodian, one of our major role is to ensure that, again, I like to remind members that we, the custodian, do not make any investment decisions. However, one of our key roles is to ensure that the investment decisions made by your fund manager are transacted and processed in a timely and efficient manner to ensure that the scheme does not lose out on any income. We also do safekeeping of all your asset classes. So we just do this by ensuring that reconciliations of the asset classes held with us are well done and on daily basis. We do asset servicing. By these members, I mean that we are the people who are responsible for collecting income that is arising from the various investment decisions that your fund manager has made. So we ensure that we correct all these income in a timely and efficient manner, again, to allow the fund manager to reinvest the same. Occasionally, we do account opening. So in the event that your fund manager finds it important for this scheme to invest in markets outside Kenya, again, we ensure that we open those accounts in a timely manner. Members, we do reporting and compliance. We meet with your board of trustees here on a quarterly basis, and I do confirm that for the year that we are reporting, we held a board of trustees meeting, again, to just confirm to your trustees that your assets are safe and the transactions that are taking place in the scheme. We also do processing of payments, so members' monies that are due for withdrawals, payrolls, and expenses for the scheme. Again, we ensure that we process that in a timely manner. We do receive contributions on behalf of the scheme, and I do confirm to the members that for the year that we are reporting, all the contributions owed to the scheme were received in good time. Finally, we do whistleblowing. So in the event that we notice any suspicious transactions within your scheme, again, we ensure that we whistleblow. However, I do confirm to the members that we've not had to do this for this particular scheme because your board members are doing a good job in just ensuring that the scheme is compliant. I'll take you through the next slide, which is just confirming assets under custody for the year that we are reporting. We've given a breakdown of the asset classes, again, comprising the monies that we held within our custody, and again, just ensuring that they are within the RBA guidelines. And I do confirm to the scheme members that we held assets as at of 31st December 2024, amounting to 9,549,583,694 Kenya shillings. On to the next slide, members, I'll take you through some of the risk control measures that we've put in as your custodians to ensure that your assets are safe with us. And one of the mitigation measures that we have in place is that we have signing mandates within our operations. So we only ensure that we process instructions that are signed as per the mandates that we have in place. And in the event that changes, again, we receive updated mandates. We have a service level agreement for all clients that are under our custody, and I do confirm that we have an SLA with this particular scheme. We have adequate custody facilities within our premises. So in the event that we are holding any sensitive document on behalf of this scheme, then members can be rest assured that that will be in safe custody. We also do have segregations of roles that are enforced within our procedures and systems. By this I mean that when we process any instruction on behalf of this scheme, it goes through what we call a maker-checker process, and this is again to just ensure accuracy when processing and dealing with member monies. We have registered your assets members in what we call a nominee name. This is separate from both the bank's assets and other clients' assets. And by this I mean that your assets are held in trust, and as such, they cannot be used to pay back any bank obligations. We have in place our professional indemnity covers that again just helps us in our daily operations. But again, I do confirm to the members that we've not had to use our professional indemnity cover for any eventualities. Members, finally, I do confirm that we have a disaster recovery or what we call a backup working facility in place. So in the event that anything was to happen to the premises where the custody department sits, we have a DR site that is can be operational in about 2 hours, and this is again to just ensure business continuity. As I wind up, members, to just give you a confirmation that income earned for the year that we are reporting was collected in good time. I also do confirm to you that all your investments were executed as per the laid down regulations. We also executed your instructions as guided by the fund manager. And finally, members, I confirm to you that your investments are safe within CBA custody, and we continue to work on a daily basis to ensure that we continue to hold your assets in safe custody. I'll end my presentation there and take questions at the Q&A session. Thank you.
So members, that is the report from the custodian confirming the assets exist. Now we'll take a second poll from the Trust Secretary.
Thank you, Chair. We have been doing the second poll, and then we have been doing our member education, and we thought it's necessary to know if members would be more interested on a focused personal financial planning session as we do the rest of the member education. And I read the question as it is. Would you be interested in attending a dedicated member education session purely focusing on personal financial planning? Would you be interested in attending a dedicated members education session purely focusing on personal financial planning? Either yes, no, or maybe. That is, we are looking forward to have sessions with members during the year and the year coming, and we are also looking at the topics to discuss with our members. So I repeat the question again. Would you be interested in attending a dedicated members education session purely focusing on personal financial planning? That is budgeting, management of funds, investment for your personal money. Either yes, no, or maybe. And I hope you have voted or you have given your answer and request the ICT to share the outcome. Thank you. I think, Chair, it's clear, and members want to have that session. 95% of our members say yes, no one say no, and only 5% say maybe. So I think it's very clear where we should be focusing on our next member education sessions. Thank you.
Those polls indicate our participation, asking you to participate. Please keep participating for the next one. At this point, I'll ask the actuarial. No, pardon me. Yes, the actuarial. Alvin Kitui, please come and give us your report and give us indications of where we are.
Okay, thank you, Chair. Through the Chair, the CEO, Board of Trustees, and fellow service providers and members, good morning. Can you hear me? So thank you. My name is Alvin Kutui from Zamara. I'm here to represent the team. I'll take us through the presentation, and then eventually we shall take the questions. So the structure of the presentation through the chair is that who are Zamara? So Zamara, basically we have our higher purpose is to create a financially secure and prosperous society. Basically to say that our role is just to determine and see the impact that we have to the society in terms of the finance, so being a financial institution. So we advise key stakeholders so that they make decisions that can be able to secure them to become prosperous. So with prosperity, again, we just interact with the stakeholders I mentioned that guides engagement in terms of the customers and also the shareholders. So values, we try to simplify information. So we know that our work is a bit complex. So we try to simplify information that's easy to be able to consume. And Chair already mentioned something about the practice notes that came through last year. So basically it also says that we need to make information as easy as possible to be able to be consumed easily by the members. So empathy, we look at things from the customer's eye. So whatever we do, if we are doing the calculation, if we are doing the actual evaluation and the likes, we try to see it from the member's perspective while doing our services. So also trustworthy, so we are not biased in terms of how we conduct our services. So those are our 3 core services as Zamara. So moving on swiftly to the next slide. So basically to look at who is an actuary. So I understand that maybe most members don't understand who an actuary is. So our role is actually we are trained to use mathematics, use probabilities to quantify the financial impact of uncertainties. So we do the calculation around it, being especially a DB scheme, we determine the impact that will have on your scheme. So just look at even the first one, statutory role for a DB scheme. So DB scheme is where the benefits are formula based. So there are 3 main parameters that we normally look at. We look at the salary, we look at the accrual rate. Accrual rate is basically the generous factor that the sponsor has used to see how much you need to accrue your pension for each year of service. Then also look at the salary. So statutory actuarial evaluation, we do it for at least 3 years. Every 3 years we do an actuarial evaluation, see how much is the deficit or the surplus, and be able to advise the trustees to see if they need to make a remedial plan, if it's a deficit, and if it is too much surplus, also if there's also need to do a contribution holiday. Now for the DC is a flip of the other side. So at DC, purely you as a member, you take risks, unlike a DB. So I mentioned that DB is a formula based. So basically the one who is going to take the risk is the sponsor promises to pay you benefits after having served him for a certain period of time. In case of a deficit, the sponsor comes in and be able to fund it. Now for the DC, we do a financial review. Basically we look at the return that you've had. The previous speakers have already talked about it. In terms of how much interest have you earned for that specific period. We look at the asset and be able to distribute to the members. Then IDD, so after retirement also in terms of how much you need to take home. So of course you need to invest your money, you continue pulling out your funds for each and every other year. Now in terms of determining calculations, for DB as mentioned is a formula based. So when a member retires, we normally come in and be able to determine how much is due to you using the formulas, also simplify the information as possible, be able to be given to the members. Then investment policy statement, we work closely with the previous speakers to be able to come up with investment policy statement that suits the risk of the scheme and also in terms of looking at the sponsor and the scheme features. So we also give different advice in impact of changes of legislation. Already I'll mention in the subsequent slides. If there's any change, also look at the impact of pension increases and the like. So especially when you're doing an actuarial evaluation, you try to do as many permutations as possible for the sake of advising members and also the scheme. So moving on to the next slide, where are we as a scheme? So a pension scheme is a promise as mentioned. You as a member, you contribute right now. I understand that while still in service, there's a paycheck that you receive every month. So by the time you retire, that paycheck will cease. So meaning that another paycheck will have to come in retirement. So you need to continue to save towards retirement. So we try to advise. One of the things we normally do is what we call NRR. NRR is basically the net replacement ratio. So we are saying how much do you need to save by the time you retire. So it's a ratio between your last salary and your first pension. So supposing, let's say you're earning, just for the purposes of illustration, you're earning, let's say 100,000, then the subsequent month, the first pension is 60. So we are saying your salary has been replaced by 60%. So that change is 60%. So we try to assist members just to make sure that they're making adequate contribution while still in service so that they have adequate pension by the time they retire. You also need that currently the current generation, the Gen Zs of the current generation, by the time you retire, I'm not so sure, Chair, you can confirm, if he'll be able to assist you. Unlike in the previous years where when you retire, the firstborn takes up responsibility of looking after the children, also the parents. But I'm not so sure if this still happens in the current generation. So basically to make sure that by the time you retire, they shall no more WhatsApp. So your children are safe in terms of not be able to depend on the children. And also the spouse, in a likely event that you pass on, also the beneficiary being the spouse and the children are be able to continue with a normal life. So in terms of the scheme background, sorry, Chair, it seems like this thing is too fast. So this is scheme. So Kenya Power pension scheme, this is scheme, began in the year 2012. Defined contribution scheme, being the KenGen staff pension scheme. Then we have the DB scheme that was established in the year 2000 and currently close to new members. So no new members are currently joining the scheme. So members who are below 45 years were allowed to transfer to the DC scheme, but those who are above 45 years were the one that continues to the scheme to accrue benefits in the scheme. Also, another product was introduced, IDD, income drawdown section for the DC scheme. So remember that there are two distinctions between a DC and a DB by the time you retire. So when you apply a formula that I mentioned, 3 parameters, we're talking about the accrual rate, we're talking about the salary and the service, it gives you a pension. So that pension can be paid full or be paid, or part of it be accrued, be given as a lump sum. However, this is the opposite. So whatever you've contributed, just like the bank, so whatever you contribute, whatever you will be earned within that period will give you a lump sum. So DB will give you a pension, the DC will give you a lump sum. So you need to distinguish in terms of how much you need to take home. Now, if you are given that lump sum by the time you retire, so there's an option of taking an IDD. So you put that money in a pot where every month you'll be taking a lump sum home every month until a period of 10 years, then you can review the IDD. However, just for purposes of guidance, IDD actually, in most cases, favors people who have high savings. So if you have some good money that you've saved, actually it will favor you. Now that we are also saying we are having higher returns in 2023 and 2024, hopefully the returns will also be growing. However, you also need just to take risks that in case of negative returns, again, for the IDD, you'll be able to impact your benefits. So DB and DC also are contributory. You make contributions. So just to maybe mention that when you say the scheme is contributory, because sometimes we interact with the members, they're saying, I made my contribution in the DB, where did my money go to? So in terms of the practice of a DB scheme is that the contributions you make are actually to assist the sponsor to fulfill the promise they have given you, unless if it's a hybrid. So the sponsor is saying, okay, I'm promising to give you these benefits, but how do I give you these benefits? Can I afford these benefits? They're saying, okay, you can assist me in making partial contributions so that I can be able to fulfill the promise that I already made to you. Just moving on to the next slide. I already mentioned about a formula. So the formula is split into two. We have service up to 1999. We have an accrual rate of 3%. I mentioned accrual rate is the rate at which you earn pension for each period of service. Then we have 2% for service after 2000. So you need to know that the people who moved, meaning their service was frozen. Now, also in terms of the pension increases, the scheme offers 3% up to 2000 for service up to 2000. So basically, when you are doing our valuation and main valuation, these are some of the assumptions we take into account to determine how much you need to reserve for the members while still in service. Members commute up to a third of their pension for a cash lump sum. So already mentioned that when you retire, it will give you a pension. So you need to convert that pension into a lump sum. So we are saying you commute. So if let's say you've retired with 90,000 and they say you commute a third, that will be 1/3 times 90 to be 90,000. That 90,000 we multiply by a factor we call commutation factor. So just to say, okay, how much do you think will be paid this pension in retirement? And these factors vary from scheme to scheme. We have fixed factors which are normally generated by, already determined by the scheme, but also we have those factors that we normally try to look at in terms of looking at the features of the scheme, how much has the sponsor promised you to pay you, how is the spouse, if you pass on, is the spouse going to get something, and the like. So there's so many parameters involved in it. So we commute a third of it times a factor so that we'll be able to give you a lump sum in retirement. Now, benefits offered by the DC. So the DB I mentioned is a formula. The DC is the contribution, just like a bank has already mentioned. So you make contributions. Currently, the scheme is very generous, 10% for the member. The employer is doing 20%. There are very few schemes that actually do that. So you have 30% contribution. So this money is actually reinvested. Understand that every year when we declare a rate, you'll be able to see your statements and see how much has been accumulated to you. So you'll have a pot by the time you retire. So financial review, so Chair, to make sure that, financial review applies for this scheme. So we are looking at how we are able to determine your rate. So you have already gotten your income for the year. So we have a simple equation of value. So I'll call it equation of value. So we look at your balances, your contributions that you've made within the year. We look at the withdrawals you've made within the year. We look at the tax that has been charged on you, and currently it has been elevated for 30,000. Then we look at investment income. So when you combine these parameters, it should be equal to the value of the assets. However, if the scheme has a policy in place where it keeps facing off, so that rather than giving you 10% this year, next year they give you -2%, the following year they give you 20%. So some schemes actually try to face off so that they smoothen the return, so that if you're used to seeing 10% or maybe 8%, it's consistent on a year-to-year basis. However, there was a legal notice that came through in 2024, basically to just bring amendments to the regulation targeting members in the violation of the DC scheme. So this is to say that as per the amendments, the net returns declared credit to the members, shall exclude debt instruments. So purely debt instruments are notional. So there was an outcry from the members that they're being penalized for the change of fair value on debt instruments. So through the regulator, they came up with a regulation saying, okay, going forward, they shall not be penalizing you on the change of fair value. I understand in the previous year there were losses in terms of now seeing that maybe the rate will be lower. Now I'm saying now we are having gains coming through. I hope members will not start crying again that now they want to benefit from that. Now we also try to, now what happens is that we try to monitor the scheme so that now we continue monitoring these debt instruments as they are unwound as we move to maturity. So if, let's say, the scheme is now planning now to now close it or maybe transfer all the assets, now the debt instrument will have to be realized so that now it can be used in terms of getting the interest to the members. So just to show you the return that we had for the year. So Chair, you can see it's a happy year. We have a return of 14.1% for the main fund. Then tax element coming, we have an unregistered rate of 11.9 for the main fund. IDD is more happier. They have 16.4% being applied to the members. So you can see there's a bond reserve there. We have 402.4 million. So that one is not distributed. So it keeps monitoring until retirement, until maturity. Then the IDD, we have the 38.15 million that already mentioned in terms of also the bond reserve. So members had a balance of 13.522 million, then 730 for the IDD. Then the value of assets were 13.4 billion. Then we have 718 million being the fund value for the assets. So it's a happy year, and we hope that even in 2025, it will be even more happy than you have been for this past year. So in terms of actual results, the last standard actual evaluation we did was 2023 as per the requirements. So the next one should be in 2026, basically an interval of 3 years. So liabilities were 10.5 billion. The value of liability was 10.5 billion. The assets were 8.7 billion, meaning that if this scheme was to be wound up at that point in time, it means that the assets available are 8.7 billion. But everybody needs to be given 10.5 billion. Meaning there's a deficit. So that is why we normally come in and make the evaluation and be able to advise the trustees and the trustees and the sponsor to see how much they can be able to contribute. So if that scheme was to be wound up on that at that point of time, if let's say your value is 100 shillings, you as a member, at that point you'll be able to take home 84.2% a deficit. So you shall not be able to take the full value of the assets. So there's a deficit at that point. We hopefully with now the assets doing better, we'll be able to expect an improvement on that. So we're also doing roll forward, so basically just to do high level estimation of the liability, and we can see there's an improvement. So we have moved from 84.2% to now 91.6%, a good direction, and we hope that now it will continue making improvement even in subsequent periods. So this higher than 84.4, a roll forward a desktop valuation. So maybe in 2026, or maybe we shall be appointed in subsequent period, we shall be able to monitor and see how it's progressing. Trustees are currently have a deficit funding plan. The remedial plan is in place. So, so now it's now in the balls of the sponsor to see how to be able to fulfill the obligations. So finally, so we have given you the DC returns. Sorry, Chair, it seems that this thing is too fast. Doesn't like Gen Zs, huh? The rest declare based on the whatever has been earned for the year. Then after declarations above, the DC scheme still maintain healthy funding. So as mentioned, DC scheme is whatever you have. Whatever you save is whatever you have. With a higher return, you feel happier and you'll have a higher return. So for the DB, also is less than 100%. So that one basically means that the sponsor has to come in and be able to assist to fund the scheme. With that, Chair, thank you, and we'll welcome questions at the Q&A session. Thank you.
Thank you, Alvin. Members, if you've noted, Alvin has given both for DC and DB, and prepare questions accordingly. I will now call upon the scheme auditors, Kelvin, to come and just confirm what he observed when he carried out his work as the auditor for the scheme.
Okay. Through the chair, MD and CEO, trustees, management, members, fellow service providers, good morning. Yeah, my name is Kelvin Kailikia. I'm representing PwC, who are the auditors of the DB scheme. Okay. Next slide, please. I'll read our opinion, which is included on the annual report and financial statements. So before I get to the opinion, I want to confirm that we carried out an audit of the DB scheme, and we gave our opinion on the 26th of March 2025, signed by the audit partner, CPA Bernice Kimasha. Our opinion is included on pages 72 to 74 of the annual report and financial statement, which is this booklet. I'll read the opinion. We have audited the accompanying financial statements of the DB scheme set out on pages 75 to 107, which comprise the statement of net assets available for benefits at 31st December 2024, and the statement of changes in net assets available for benefits and cash flows for the year then ended, and the notes to the financial statements comprising material accounting policies and other explanatory information. In our opinion, the financial statements give a true and fair view of the financial statements of the scheme as of 31st December 2024 and of its financial performance and its cash flows for the year then ended in accordance with IFRS accounting standards and the requirements of the Retirement Benefit Act. Thank you, Chair. Back to you.
And now, members, you all have received the annual report either by email or on our website or the hard copies. I presume here that you have read that and that you have questioned and understood what has been verified. So I take it as having been read and understood. I now wish to take you through some items that are a requirement of a meeting like this by the Retirement Benefits Act and also by the Companies Act. We held 6 full board meetings. Administration and Communication Committee held 4 meetings, and the Audit and Risk Management Committee held 5. The Investment and Strategy Committee held 8 during the year. The trustee remuneration is disclosed in the financial report on page 101, if you can follow through there. Currently, the scheme sitting allowance is 26,000 to the board chairman and 22,750 to the board members, all net of taxes. I would like also to confirm that there were no changes in the benefit structure and contribution rate during the year under review. And at this point, I will ask the RBA representative, Bosco, to come and make his remarks. Bosco, please come and speak to us.
Assalamu alaikum. Hamjambo. Bwana asifiwe. I'm sure the ones online are smiling. The ones here are not smiling. So I'm actually very grateful to be here. Chair, thank you. You noted Chair was very diplomatic and strategic. He made sure that he's confirmed everything that the regulations and the Act says he should perform before I come here. Then he started by wittingly saying remarks. Remarks would have meant by now I should have sat down. Then said, I talk to you. So I'll also ask for your indulgence. I will do 1 minute for what the regulator says, and then you'll allow me, I don't know whether it was by coincidence, by the way, members, I did not interact with trustees prior to this. So when you see me in white like KenGen, I'll have to go and check with the person who dresses me. The white, I think it was just a coincidence. However, I'm happy that your employer is actually an employer of choice. And the reason is, and today I will reveal, that one of my first places I ever wanted to work was KenGen. So, engineer, before you were here, I made an application, but Beatrice, it was never looked into. Fortunately, next time, I think, Josephat, next time you have to make full disclosures. Fortunately, one of my mentors and a leader I admire, Dr. Edward Odundo, realized there was a brain hovering somewhere that KenGen refused, so let me snap him up. So today we are all here together, and the hours I would have used in the interview, I'll use those few minutes to now address you. So thank you very much. And members, I'd like you to see the gravity and how serious pension is. I'm glad we have retirees here. I also have my senior retiree here, Daktari, so that you can also hear. These things are real. And you can see the importance your employer is giving to this. He's giving us a whole Friday. Yani tulitoka kimbi holiday, sasa tuko pension matters. This is your investment. This is what, your future, because we started with a very good word, and our MC actually gave us an introductory sermon. So I think I'll just start straight away to what brought me here before I digress further. And I like to begin with, maybe you can have the slides so that we see where our retirement journey starts. Yes, sorry. For those who read the Bible, the good book tells us, and I never start anywhere without reading this verse, Numbers 8:25, that this is what applies to the Levites. From 25 years old and upward, they shall enter to perform in the service, perform service in the work of the tent of meeting. But at the age of 50 years, they shall retire from service and they shall work. Age of? All of us are beneficiaries, I believe, of probably it was the Kibaki regime. Retirement was at 50. How many of us would still be at KenGen right now? By a show of hands for those who are here. So all of you are retirees. Thank you. But technically what you're saying is that this was prescribed from the beginning. God gave that command. You remember in France, they wanted to increase the retirement age. And they had their own kimbi, or retirees, for those who don't know. Gen Z's, kimbi is a Gen Z word for, is a Gen Z word for demonstrations. France were out there demonstrating because they didn't want it to be raised. In Kenya, if you dare say you are reducing it, is when we will go for, we want to stick here. However, look at it. If you are to retire at age 60, right now, I know our life expectancy, most of us still have our parents. I'm very sure of that, and we thank God for that. And most of us have seen people are living up to the age of 80, some even 90, right? So if you retired at 60, and let's give you the bonus, God gave you up to 70, then umepewa bonus up to 80. How many years are those? 20? 20 years. So imagine 20 years after KenGen, and you're already addicted. Do you know what addiction you have? All of you are addicts. Every time munasikia mihadarati, munafikiri ni vijana wadogo. We are all addicted, either like me to tea, or addicted to, I'll show you. Before I leave this stage, I'll give you your addiction, and then I'll give you, each of you, your type of addiction, and then you'll see if in between here I'll have given you the remedy for your addiction. So we thank our employer for giving us this day, for allowing us, and also for being present with us, so that when you are saying things, the sponsor also hears. So your scheme, I will say, and now this is from the regulatory point, is actually one of the best run schemes. Don't grow a big head. I'm just saying that because we need to clap for our trustees and our sponsor. Very professionally done, and I thank also the service providers because I watch what they do. Even looking at the presentation of your accounts and the books, very smart. You're even complying to ESG. For us to do a full audit, I'm already seeing certain aspects and things that are actually very critical. So service providers also, thank you very much. We also supervise them, we regulate them. For your scheme, we went over and above. We did an inspection. Trustees, sorry, I have to reveal this. There's nothing you'll do, you're behind me. We did an inspection to your scheme. A scheme inspection, normally we will do, there are two types. There is the routine one, and there is one that we do if things are not going well. This was routine, so rest assured. We're just trying to see what is going on in your scheme. And I can assure you, it was a thorough. The whole board, as you see here, sat with us, and you see when you see my seniors and I'm sitting there grilling them, thankfully I was part of that team. It's not easy. So we go through each and every bit of your operations. And I can assure you in this AGM that your money, your future investing for this future is being taken care of well. So in terms of all your documentation, your trust deed and rules, those are filed. Good governance documents, you can see there, they're saying, and the beauty is, your trustees have not just filed the documents, they're also living the documents. We see that is the problem we have as a nation. We have good policies, good everything, but implementation is always the problem. However, in this case, we are actually living the talk. So kudos to the trustees and the secretariat for the good job. In terms of trusteeship, I think they've fulfilled all the obligations. And to be quite honest, this is actually a job that I call a noble duty. Just like medicine or tulikuwa na walimu na daktari, the noble professions, right? Also the trustees. They are doing this for you to make sure that you have a good future. So whenever I talk to unions, and I think we need to have a one-on-one with union members, other unions, I'm not talking about KenGen, is people fail to understand. And I tell even the younger generations, now I'm talking like an old man, but the thing is this, when you're getting into employment, one of the first things you need to check is 1, pension, and 2, medical. Pension in that the employer, by the way, if you read our act and regulations carefully, pensions is not compulsory in Kenya. It is only now the contract that we have with the employer that makes it compulsory. And you see that nature of voluntary nature kind of now is where sometimes we say our coverage is not enough, but we thank God. So ukiona NSSF is being deducted, don't get angry. NSSF is yours at the end of the day. So what you're saying is this part that the employer is putting in, it is over and above what they will give you ordinarily as your salary. So the employer is actually going beyond and saying, after you've served me for these 20-something years, let me take care of you till your heavenly Father decides where you want to go. So it is an additional. And employer can actually decide. I know in a government setup, someone will tell me how can they there. But it's good when we get that background understanding. The employer can say, okay, fine. I'm not contributing, as it happens in other industries. Let's deal with the one which is statutory for the government. So we should always appreciate this and be ready for that. So your accounts are submitted. In terms of the DC schemes, I don't think we have any outstanding contributions, at least the last time I checked, unless HR can tell me otherwise, and the administrator. Tuko sawa. Chair, tuko sawa. Asante. For the DB scheme, yes, there is that deficit, but you can see the progress that has been made in terms of financing that deficit. So we are continually monitoring that progress. So don't worry, those in the DB don't have jitters. It is all safe. In terms of investment, you've heard about the investment. We have what we call the IPS, Investment Policy Statement. Kindly members, there are two documents I want to give you a nice assignment to read. Your trust deed and rules number 1, hiyo ndo katiba. That is your constitution. I don't know if I can ask right now, by a show of hands, how many have read the TDR? KenGen TDR. Aya, sawa, kama mnaogopa nifinyie jicho kama hujawasoma. If you've never read, just a wink. Hey, okay. That is your constitution. That is what guides what is done in this scheme. And then the IPS, that is your strategic plan. You've noticed that your pension scheme, this investment that you have your bosses sitting in your board. Imagine you have an investment where your employee is sitting you've employed your in your board. So it's a very secure and safe investment. So you have this, and you realize pension is all about getting in the contribution, investing it, and then paying out. So the investment part here katikati is very critical. What your fund managers are doing with the trustees is very critical. It's all laid out in the IPS. So members, take a keen read of it. Don't just read the financial statements. I know you think AGM is just read what PricewaterhouseCoopers has said, auditors report, and that is it. No. Go also into your documents. Read your trust deed and rules. Because if you ever have a dispute in your scheme and you come to the regulator, our first point of reference will always be your trust deed and rules. Before we go to the act, before we go to the regulation, before we go to the constitution. So kindly make sure that next time, God willing, if I'm here, we'll go through it. So that is the compliance status of your schemes. And I'm not done without talking about the recent regulatory changes. And I'm glad the chair talked about the tax amendment laws, and I know now you're happy. For those on gratuity, you've heard it's now tax-free. It's not a rumor. It is now confirmed, official. Then, very importantly, for our Muslim brothers, there's exemption from Table G guidelines on Sharia-compliant investment. So your scheme now can move to Sharia-compliant investments. So I'll challenge the trustees to look with the fund managers, how can we either have a complete Sharia-compliant vessel within the scheme, or within those existing, how we can be able so that we accommodate our Muslim brothers, because that now is allowable. The Treasury Circular number 9 of 2024, I'd like all of you to read because you are all part of quasi-government institution, where it states what needs to happen in schemes, including allow contractual staff to be able to join the scheme. I believe your TDR has been amended to accommodate that. PRMF, very key. Contributions up to 15,000 now are tax deductible. I will not, I would have loved to belabor on that, but I will not. It's something, maybe the next, move to the next slide. On post-retirement medical fund. Sorry, it seems this is moving way ahead of me. I want you to leave it at where that old man is. Today I'm actually privileged because it was the brainchild of Dr. Odundo, who is sitting here. Sorry, Dr. I'll have to mention you 1,000 times because now you're here, and some of these things, you are part of it. It is a brainchild of Daktari, and I'm glad and privileged to have been part of the team which formulated it. And there's nothing as critical. If you read our member survey, our pensioner survey of 2024, which I'll share with the trustees, maybe it'll circulate to the members, you'll see the critical components which the retirees are talking about. One of them is medical. As you age, what happens to our bodies? It goes, it's like it wears down. Si tunaelekea Sayuni. So our bodies have to start giving way. Personally, I realized I'm no longer the fit young man I used to think I was. I sprained my leg. Before, within a week, I'd be back to the basketball court. This time, I even passed out. And they thought I had a heart condition. Then the doctor laughed and said, it seems your heart is in your feet. Because they found it was only a sprain, which took 3 months to heal. Previously, after 1 week, I'll be back and active. So that's what happens to our body. So retirees are spending up to close to 30% of their retirement income on medical. Of course, these have been overtaken by what they spend, and I know those of you who are here, on school fees. So we realize school fees is out of dependence. So I'll not belabor on what we have on that research, but retirement, your health is key. Whatever KenGen is giving you now in terms of medical, all of you are looking very healthy and brilliant. Retirees are even looking better, so they're doing it better. You want to continue it. Sio utoke umetoka kwa triage. Those of you who've gone to SHA, MP SHA, I had the person who does safety said there is a Aga Khan nearby, and when you go to the triage, even your name, the way the nurses call it, it is enough to make you heal. You'll hear patient, even the way they pronounce your name, unasikia vizuri. Imagine you leave that one, uende kwa, and no pun intended. You go to that, I don't know what they call it, level 2 or level 3, ile dispensary. And now you have to push yourself on that bench. Ukitoka kwa hospitali unaenda kwa tailor ashone kiraka. You want at least to maintain that. So Dalai Lama, when asked what surprised him most about humanity, this is what he answered. That man sacrifices his health in order to make money. Then sacrifices money to recuperate his health. And then he's so anxious about the future that he does not enjoy the present. Does that speak to most of us? Don't answer. The result being that he does not live in the present or in the future. He lives as if he's never going to die, and then dies having never really lived. Don't let this be your tragedy. You have that position, so use it well. You have an IDD. Allow me to just very fast rush through what informs income drawdown. It is my role as a regulator to just say everything as it is. I know there is already an IDD in place. So members and the scheme, you'll allow me, so that we say that in terms of membership, you must have attained what we call 50 and above, or what your trust deed and rule says in terms of that. Beneficiaries are also entitled to payment out of the income drawdown fund. So in case of a member is deceased, instead of taking that money, say, to a trust fund, then you can have these monies paid within the IDD. And I love what your scheme is doing, reaching out to talk to the beneficiaries. I have seen you've gone out and reaching out to the beneficiaries. There was a question posed by the chair, by the CEO on, do you want the financial literacy. Now, members, I'd like to challenge you on this. You learn that financial literacy. You have it and you keep it. Most of you, payslip najua siku hizi ni electronic. You make sure you have 3 passwords to get to it, right? Muliacha kuacha kwa draw. So you know everything that you own. Most of our spouses, assuming, KenGen, I know you are paid very well. Probably the least paid, net anaenda now ukitoa shisha, etc. is probably, kuna mtu anapata below 100,000. Iko? Okay, tuseme tu hata retirement. Let's look at when you're living. Per diem, tukiachana na pay, wacha tuache salary. Sometimes you get to, interact with 50,000, 100,000, unaenda sako, unachukua 1 million, right? You have your spouse and your children. Do you talk to them about financial literacy? Such that, and men, we are guilty of this. When we leave the house, tunachia our spouse 1,000, tunamwambia yeye kulast mpaka, it's Monday, unamwambia yeye kutoshe mpaka Friday. No, you don't want to respond. Ladies, do you leave your husband with something when you're leaving? Equity. Mkwe mkituachia kitu kidogo. But what I'm trying to say is this. We rarely expose them to money, even our children. We rarely give them that responsibility and show them what we do, show them what to invest. So when we pass on, God forbid, you find that, and I was personally, I think this took me aback. This year we were taken through the group life insurance. And I realized my net worth when I'm dead, Christ, it is so high, I'm even asking myself, what am I doing alive, struggling for these little ones? I should just die and then they continue with a good life. Even if you do your group life, add pension, you will not even like your spouse to know. Atakupeleka ahera mbio sana. What I'm saying is, you don't have to expose to them what you're getting, but tell them I have a pension, right? Tell them I have this and this. I have something in my circle. Wacha wajijazie yengine. Start teaching your children to interact with money. So that when you go, we live this life, and then KenGen pays you a whole sum of 25 million. Imagine you've never given your spouse 100,000 shillings in your life. Hajawahi shika 100,000. Then amekuja amepewa 25 million. What do you expect? But then let me ask you a question. Going to an ATM. Have you ever asked yourself why the ATM normally gives you your card first before the money? Do you know the ATM always gives you your card? Because even the ATM knows there is something about human beings and money. We give you the money first, you leave the card. Utakumbuka baadaye. So, an income drawdown. Yeah? You can enable if your kids and your beneficiaries know this. If you pass on, they'll continue drawing down from that. They will not go for a cash. So they'll know we can get something monthly in terms of a pension or in terms of a PRMF. Encourage them. Do not withdraw everything if I go. Kama kuna PRMF, enjoy the. I hope the scheme rules allow for that. So in the PRMF, you have to be given disclosure on terms of access, a simplified benefit illustration, projection for at least 3 scenarios. Risks of the fund, which include investment risk, the longevity risk. Remember, the risk in this IDD is borne by you, the member. It is now not to a third party. So inflation, the expenses, taxation benefits, if any, and the fees and charges that are applicable. Right to information. Everybody in an IDD, then you have to be given the options available upon expiry of the minimum drawdown period, which you are saying is 10 years. You have the freedom to choose the frequency of withdrawals and amounts payable. So we are saying up to 12%. You can draw down up to 12%. But you're saying 12% is the maximum. You can withdraw down 1%, 2%, or 0%. You can do it monthly. You get it after every 3 months. Or on good years, you can say, let my money continue being invested. And on this, allow me to, I know I'll point it out somewhere, but because it's come to my mind, when you're living on retirement, you have the freedom to leave your money in the scheme for up to a period of 1 year without taking it. One, the reason we gave that is so that members, you can take your time. Trustees, go to the trustees. Let them give you all options available on you receiving your pension. Number two, out there, it's also very important. When people know you are retiring, they know money is coming in. So all those people who want you to be chairman of everything, to be a politician, they'll be waiting for you. For those in the T-zones who get bonus, and those that in Mombasa who know when the ship is docking, there's also another group which knows very well when money is around. So they'll also be waiting for you. They know there's a retiree. But if you wait for this 1 year, wanaona KenGen, huyu mtu alitoka KenGen. Month 1, hey, anako tu broke. Month 2, bado yuko broke. Month 3, watasema huyu hata alifutwa kazi, si retirement. They will all go. Only those who matter, your nuclear family, and please pay attention to your family, have them as your friends, will be the ones remaining. After 1 year, wataona unanawiri. So have your other investments to take care of you. That's just a tip. Then you have a right to transfer to another IDD, sisemi mtoe kwa KenGen, after 5 years. Why we put that there is that if, because the risk we said is on the member, and Chair, allow me, and I've taken a little bit too much time. CEO, I request that now I'll summarize my storytelling. So that if it's not invested well, you're not tied up to 10 years. You can take it to another IDD who can now take good care of your money so that you don't deplete your resources. If the beneficiary is a minor, I treat minors now in terms of beneficiaries can be in an IDD, then they have a right to transfer when they get to the age of 18. But then most of the conditions of the IDD will not apply to them. And in this case, if it is school fees or health, medical, and you have to pay and it goes beyond the 12%, then you'll not limit and say, we cannot pay. That is just a case in point. So this is just a summary of what we've talked about in terms of an IDD. And then next, sorry, I think I rely on you. So this is just a reminder on your trustees. Remember your relationship with the trustees is a fiduciary. So let's go back to the previous slide, kindly. Yes, there is that fiduciary relationships that exist between you and your trustees. So these are your trusted friends, okay? And they will act in your best interest at all times, yeah? So they are supposed to act prudently, be loyal to beneficiaries, avoid conflict of interest, and not profit personally. Mumesikia wanalipo pesa ngapi? Okay, ya chair ndo iliriviliwa. Did you hear what the chair is being paid as a sitting allowance? How much? You are alert. I love this audience. Online, I hope you're also just as alert. 26,000. And managing a fund value of how much? What is your fund value for DC? Let me go to DC. Fund value, hey, what is your net worth? Your members don't know they are billionaires, eh? What is your net worth? Thank you, sir. Around, is it 9? Yeah? Let's call yourself 10 billion, eh? You are 10 billion. This is Kenya, mnajua. Ukiongea juu ya 10 billion, alafu angalie Bosco, unaona nini? Flight risk, sio? So they're acting in your best interest in this investment. So what I'm saying, why I had this is they also maintain confidences. You've seen somewhere there on data protection. So this is just an assurance. I have to give you assurance on all levels. So come to your trustees, come to your secretariats whenever you have any needs. So your rights, haki zenu. Payment within 30 days. I know you know this, but if I leave here without saying it, I might get a show cause later. So if you're transferring from KenGen, it should be done within 60 days. And then you have your options upon exit, whether on retirement or any other case, of either getting a cash, you defy it, like leave it in the scheme and take it at retirement age, or transfer. Non-assignments of benefit or attachment. I know your trustees are doing well on that. We checked when you're doing the inspection. This simply means that Your pension funds are your pension funds. They cannot be used for judgment debt. Whether you owe the company or you owe someone else in the circle, unless you give express rights to it and you have it witnessed, then nobody should use your pension fund to offset any kind of debts. Sisemi musilipe madeni ya sako muachie guarantors na shida. What I'm saying is, and can I give you another secret? Ama nisiwape? Niwape ama nisiwape? Sitawapa, ni kama hamna interest. Make sure you have your annual benefit statement. When you're giving the account to be paid, where your money should be paid, the pension money, and especially the early exits. Kindly give trustees that bank account yenye unajua iko safi. Sisemi musilipe bedeni ya bank. What I'm saying, there's nothing like an unsecured loan. Your unsecured loan is secured with your salary. There was a time I was given a per diem yenye hata mimi linishock. And I was called in by the manager, akaniuliza kwani na retire when I'm still young. Because they thought that was my pension benefits. You know, it came from Retirement Benefit Authority. Hao hakujua ni per diem, walifikiria huyu jamaa hii ni pension inaenda. So what the bank will do, ataichukua, they'll take what is theirs first because your contract was, it's based on your salary. And then, you remember, you've said you're living with 5 million. Ukienda kwa account unapata umebaki na 500,000. Utajipanga kweli? So, yes, I'm done.
Sana basi.
Nimemalizia hapo. Hiyo ilikuwa tu swali ya nini, and I'll end it like this. Chair, if you allow me.
Okay.
Just 1 second. Complaints. File them with RBA first. This is the only point I can be regulated, so the chair is in order. This is the only time I can be regulated. So I'm happy you're attending your AGMs. Complaints, please come to RBA first. Don't go getting lawyers. Don't spend your money on lawyers while we can resolve these things. When you go higher, you'll be returned. Next. I don't know if... now, this was just your addiction, Chair.
Onions.
The onions. Everybody has a salary which is an addiction. So there are those of you, your salary is like an onion. You grab it, you open it, and what happens? You cry. You'll tell me where you stand. The next one, there are those who have a storm salary, that addiction. You don't know when it's coming or when it's not. Tuko na salary kama hizo. Unashtuka tu ilikuja na ikaenda. There are those who have a magic salary. Like ule jamaa wa Rambo Bambo Boom. You touch it and you don't know even what happened to it. The next addicts are on what we call, I don't know why my slides now and the chair is talking is becoming amnesia salary. Mkizeeka. There are those people who can't remember what they spent their money on. You keep asking, ala, nilifanya, nililipa. And then there are those who have what you call a time traveling salary. Even before you get it, you've paid all debts, umelipa school fees, unaanza kuuliza haya, ya next salary, ya next round wanaenda HR, payroll ilifungwa, ujue kama ilikuja ama ikuja. So, brothers and sisters, ladies and gentlemen, retirees, chair, CEO, I'd like to thank you very much for your time, and I'll leave you with these reminders. Watu wa Nairobi mmepanda matatu. Kuna kitu inaitwa nganya or matatu. Even them, they know about retirement. I read this one in one when I was getting in and I was impressed. Ukiretire, ngojea pension ushago sio kwa? Sio mimi nimesema hiyo ni nganya. Allow me to introduce my colleague who we came with. He's called Ahmed. Just stand and we are also doing succession management. I saw in your risk portfolio, yours is the list. So we have Ahmed. Thank you very much, and thank you for your time. Chair, thank you for allowing me those extra minutes.
Thank you, Bosco.
Asanteni, nambarikiwe.
We have had him. So members, we thank all of our support we get from all the regulators. And at this point, I will also ask our CEO and our sponsor to come and make some remarks. He's the one who assures that we are all in Kenya. We have some delays in some organizations, as Bosco indicated. Here we don't have that. So Engineer Peter Njenga, He's very familiar to the energy industry. He's the driver of KenGen at the moment. And right now, he's just going to make remarks in person. Last year, he appeared on the screen, but this is the man who talked to us last year. Today, he's got some positive news to share with us. Welcome, Peter.
Thank you very much, Chairman. I think it is afternoon. The regulator has really taken up a lot of our time, but that was very good engagement. I think we are all here to learn. So good afternoon, everyone. Good afternoon again. Ladies and gentlemen, good afternoon. It is always a joy to come together as a KenGen family, whether you are here or with us physically or joining virtually, because I know quite a number of us are joining virtually, from Olkaria to the Western region, Kipevu to the Seven Forks, Upper Tana, Tungong, Amjamboni tena. It is my hope that you are all keeping safe despite what our nation is going through. We continue to pray for lasting peace and stability in our country, Kenya. A very special welcome to our pensioners. You paved the way, and we are standing on a strong foundation you built. Karibuni sana. I've seen some of my classmates, engineer who was ahead of me, and for some reason I got to know him, and he was ahead of me at the university by 1 year, and I'm very happy to see you. Thank you very much. I want to talk about KenGen's commitment. I stand before you not just as the MD and CEO of KenGen, but as a proud member of this family and a committed sponsor of both our defined DB and defined contribution pension schemes. Earlier we had a meeting with the board of trustees, and I felt I belong. I told them that I'm a retiree myself from Kenya Power, and I enjoy the benefits of being a retiree. It is actually the first check that comes into my account every month. So I always look forward, and I'm very happy that the trustees are doing a good job to ensure that we keep getting our monies on time. At KenGen, we are not just in the business of generating electricity. We are in the business of empowering people, our staff, our retirees, and the generations that will come after us. Supporting this AGM isn't just about policy or process. It is about showing up for each other, staying transparent, and doing the right thing for our people's future. Over the past year, we have seen some commendable progress. And let me start with the defined contribution scheme. In 2024, we achieved an 87% transition rate to the income drawdown product. That is not just a number, it is a big vote of confidence in the solutions that our scheme has created in-house. By the end of 2024, the IDD fund had grown to 768.8 million Kenya shillings. That is a solid sign of growth, trust, and good management. On the funding side, we have also stepped up in a big way. KenGen contributed 91.2 million Kenya shillings to the DB scheme and 1.535 billion Kenya shillings to the DC scheme last year. I think you need to give a clap. And to help close the DB funding gap, we added another 547.2 million Kenya shillings in deficit support. And I think that is even a better point to clap. In an endeavor to ensure the scheme is compliant with RBA regulations to improve liquidity and return, the sponsor took the initiative to purchase the Pension Plaza 1 and 2 from the scheme, which will go a long way towards its broader de-risking strategy as guided by the actuary. Fund Managers and Retirement Benefits Authority, Fund Managers and Retirement Benefits Authority. You guided us, and it was important for us to do what we have done. We are still in the last stages of acquiring this building as KenGen, and we want to believe my GM, who is in charge of finance, is here and is still bringing documents in concerning this particular transaction, and we shall complete it by Monday next week. By reducing its property holding, our scheme will unlock much needed cash to meet its obligations and reinvest these proceeds into high-yielding fixed income assets currently earning over 13%. This shift not only improves compliance and liquidity, but also supports the scheme's goal of generating stable returns, which improve its funding position and safeguard members' pensions. What does this mean on the ground? Well, it means we are able to make timely payments to 98 DB retirees and 112 under the DC scheme. That is a kind of tangible support that shows we are walking the talk when it comes to caring for our people. It's also good to talk a little bit about KenGen financial position. For the 6 months ending December 2024, and I'm sure some of you must have looked at our financials, the half-year results, our profit after tax grew by an incredible 99%, from 2.96 billion Kenya shillings to 5.3 billion Kenya shillings. Now, that was not by luck. It was a result of discipline and focus, cutting operation costs, expenses by 13.7% and boosting our operating profit by nearly 50%. Even though our revenues remained steady at 27.5 billion Kenya shillings, the efficiencies we put in place really paid off. And we want to believe that even as we come to a closure of this financial year on Monday next week, we are looking for better numbers. The Board of Trustees undertook a midterm review of the scheme's 10-year strategy at the end of Horizon 1, which comprised the first 5 years. Implementation of Horizon 2 is in top gear to ensure the scheme delivers on its mandate of providing retirement benefits to our members. Thanks to strong leadership and smart investment decisions, the scheme is in a solid financial position, generating positive returns and staying on a course to meet its long-term goals. Allow me to say a big thank you to the board for their stewardship, led by the chair. The chair, thank you very much for the good work you're doing. The scheme is in a solid financial position, generating positive returns and staying on course to meet its long-term goals. Allow me, I especially want to appreciate Dr. Rosemary Wanyoike, I think was our board member last year, and she was also a trustee in this scheme, who is exiting the board for her outstanding contribution. In the same way, let us give a warm welcome to Mrs. Rehema, in fact I should say Honorable Rehema Hassan, and we want to wish you every success in your new role. Looking ahead, investing in a greener tomorrow, KenGen's future is green, and we are excited to be leading the charge in this part of the planet. Through our G2G 2034 strategy, we are set to add 1,500 megawatts of new installed capacity across geothermal, hydro, and solar projects between now and 2034. On top of that, we are rolling out 500 megawatt hours of battery storage to make our grid even more stable and ready for a renewable powered future. In fact, the debate on storage is catching speed everywhere in the globe, and it's important that we look at how we can also get into that space. This is a kind of bold, forward-looking action that aligns with the values of our scheme, strategic, sustainable, and rooted in long-term impact. And in closing, as we gather here today, I want us to remember the scheme is not just about numbers and returns. It is about people. It is about you, your family, and your future. And our colleague from RBA, you have really spoken to that area of family. very well. I have a very good experience on what it means to have your family members close to you when things are not very good. And it helps a lot. So for all of us who are here and those who are online, please ensure that you keep your families very close all the time. It is about making sure that when the time comes to retire, you do so with dignity, security, and peace of mind. Thank you for being part of this journey. Our trustees, our members, our pensioners, and every stakeholder who believes in this mission, we say thank you. Let us keep working together to build something that lasts. In KenGen, we are saying, Jenga KenGen, inua mapato. And of course, when the mapato is high, then we are assured that those who want to do those voluntary contributions can make those contributions because there will be something at the end of the day. So asanteni sana na Mungu awabariki.
Now, ladies and gentlemen, it's really my pleasure. As we had mentioned earlier, we had the pleasure of introducing our very special guest. Now, after an eventful session of reports and reflections, it's time to shift gears and look ahead to guide us through the important subject of post-retirement medical fund and how best to prepare for life after work. We are honored to welcome a man whose expertise truly speaks for itself. Dr. Edward Odundo is a renowned academic and thought leader in pension, taxation, governance, and financial services. He's the director of the School of Pension and Retirement Studies, a director of Equity Group Holdings Limited, non-executive director of Equity Group Insurance Holdings, and chairman of Equity Life Assurance Kenya Limited. He's also a lecturer at the University of Nairobi School of Business, and he's therefore shaping the future of corporate leadership. Dr. Odundo, please come and address us.
Good afternoon. Yeah, it looks like I'm holding you lunch and many other things. But I would like to request that you all stand for a minute because you've been sitting for so long. And breathe in. Hold it for about 4 seconds by saying KenGen 1, KenGen 2, KenGen 3, KenGen 4, then you release through your mouth. Okay, breathe in, hold, KenGen 1, KenGen 2, KenGen 3, KenGen 4, then release it through your mouth, then have a seat. Because you've been sitting for so long, and I'll tell you why it's necessary to have that oxygen through your system. Thank you for giving me the 15 minutes. I remember when I was addressing the judges of the High Court, they gave me 15 minutes because they are very busy with legal issues. But when I started talking to them, we took 2 hours because they realized it's about themselves. It's nothing to do with legal matters. So I'll try and make it brief, but I would like to tell you that this particular talk takes more than 15 minutes. And I've been running courses for Harambee Cooperative in Mombasa. In fact, it was going on even yesterday. And they are doing education, what you're talking about, member education for the delegates. They're doing it for the delegates in cohorts of 70. It's a scheme of 400,000 people, and there's a fund value of 68 billion. You can see how big that scheme is. But then now we're only just educating the delegates, but then members are also planning to have that to go on. So it can take very long, but I just give a brief, and maybe later on future, maybe we can have a different session, which will take more time. We've heard from the RBA, we've heard from the fund managers, custodians, and all the rest. But I always say thank you for giving me this chance, and I'm very grateful, and I'm also grateful to God for making it available for me to talk to them. What I always say, and that's why I'm taking this microphone here, I lecture at the University of Nairobi, and I teach students who are doing master's, PhD. So it won't be very easy for me to talk there while the team here behind me, because I'll not be teaching them. So actually, to teach, you have to be able to see every student I'm teaching, even if they are very far, because I'll ask him a few questions. That's why I've decided to have this with me. I always say that I was a regulator for 16 years of RBA, and then I'm a retiree for 8 years. So I know both sides of regulation, and I know the other side of actually being a retiree. But what I can tell you that some of the policies and regulations that I used to put in place, and they're still putting in place, don't work in retirement. When you go to the other side, those things are just theories and no issue. Some of them work, but majority don't work. When you get to that side, things are different. So right now, I always teach people, tell them, yeah, I know some of these policies are good, they have improved some things, but still, because I'm there, those things don't work. And that's why I developed the mantras of retirement. So I always say, if you are first of all, if you're 96 years old today, what is your worry? Is it how much you've left behind? Is it the children you've left behind? Or what? This is a question which was given to an old man of 96 years old, and the answer was very interesting. He is not worried about the wealth that you have, how much you've accumulated. His worry is when he wakes up in the morning, looks up, he's not sure whether he's in hell or in heaven, or he's still on earth. Because he's not sure. Because when you wake up and you know you're 96 and you have to be closer to your maker and you don't know when you'll go. And you always tell people sleep and they never wake up. So when you wake up in the morning, you're not sure where you are. So that's his worry. So his worry is not how much he has accumulated. So it becomes very interesting that this is something that you have to think about. I always, when I'm giving this lecture, I talk about financial planning, which you have gone through, but I also talk about realities in retirement, which are more important than actual this retirement. And I always tell people, in retirement, pension is not the most important. Not the most important. And that's why I developed the mantras, and I'll tell you why, and what is important. I'm currently on 6th floor, room 7. How old am I? 67. How many of you are, let's say, in 7th floor? Because you have a number of retirees here. Anybody on 7th floor? 70 and above? Okay. 60, then most of the retirees must be between 60 and me, 69. That's where I think most of you are. So it means that I have 3 years and I'll be 70 and I'll be on the other side. You don't reach 70, you don't worry about people anymore. The issues we have is just between 60 and 69. And that's where most people die. That's where you have so many challenges. After 70, you are very near going. Where you are going is nearer than where you came from. You're already 70, you have very few years. So where you are going is nearer than where you came from. So your worries are not there anymore. I mean, let other people worry about what's going to happen in the future. So what is your exit plan? You must have an exit plan. How many of you have a will? Raise your hands up. One. It's not, I mean, this is a reality. I've taught many people, and what those few hands I'm seeing is normal in any training that I do. Even the one I did for the judges of Kenya, only 4 had their hands up. In fact, the current Chief Justice and a few others. The rest will tell you about the will, but they don't have. By the way, you won't die if you write a will. Just write something, even if you don't want to sign it. Some people say this was your wish. Okay? Because people feel that you write and you have other issues and you have other problems. And most of this, what I'm telling you, is my life experience also. It has nothing to do with the theories that we talk about. So I'm also going to give you my life experience, whether they work or not. Some people, it might work on some other people, but some people it might not work. And what I'm also saying is what happened to most of the people that we talk about. So you can see, very few of you have a will. Please try and have something, because it really helps, because when you go, things become very, very difficult. And I'll tell you why that is true. And because I'm making it brief, these 5 mantras that I develop and I teach people every now and then, I think most of you have seen the clips that I have. The first thing that I always say is important in retirement is not pension, it's medical cover. Immediately you leave KenGen, the following day, if you don't have medical cover, you get sick, by the way. Your sickness will come out of worries, not that you are sick. Now you are here, you rarely get sick. But wait until you retire and you don't have a medical cover. That's where the sickness will start. And it became a problem. And that's why when I was in RBA, I really pushed for this to be embedded within the pension schemes. Because it's very important. I know you people have it. CPF have it. A few companies have it. And when I introduced it, and I'll tell you why it's very important, it really helps. Immediately, I retired. I'll take you through, just briefly, can you show the table which I developed? I'll tell you which one to put through. And this, because okay, just go on, just push it to the next. The rest they can read later on. Just go ahead. I want to show you something. Leave it there. Just go back, please. Go back. Yes, that one, the next one. Go up. The next, yes, leave it there. You're jumping. Can I control it? Where is it? Just come and assist, please. Where is it? Okay, just next. Okay, next. Leave it there, please. Okay, we'll go on. Yeah, what I want to show you is just why this is important. And you can do it wherever you are. When I introduced this thing, the post-retirement medical cover in this country, it was very difficult to get the insurance companies to have it within the policy. They're good at selling other policies. So the first company which introduced it was APA. And they agreed, and I became the first member who took over the first post-retirement medical cover in this country. And the way we developed it at that time, and maybe it has been improved, we have bronze, which is 500,000, and outpatient of 60,000. Silver is 1 million, and 100,000 outpatient. Gold is 3 million, and outpatient is 150. Then platinum is 5 million, outpatient 200,000. Because I said I was giving an example myself, I took the platinum one, which was 5 million and 200,000. Because I was an employee, I was on contract. Me, I was not a pensioner. Being on contract means that you were paid gratuity. And I was actually on contract for 16 years as a CEO at RBA. I think that's the longest serving CEO in parastatals, because after every 4 years, there are 4 governments, they retire, and they insisted that I go back. But I was telling them they should let me go. But eventually they agreed I go, before all these rules of 2-term came up. So I took that one, and why I took this, at least I knew it was necessary, and I'm going to explain. And the 200,000 was outpatient. Let's go to the next. Now, what I always do is I tell people, if you employ people immediately, they're employed here, and if you're employed at age 20, and you take a premium, the premium one that I have, you only pay 2,754 for the next 40 years, because retirement is at 60, isn't it? So it means you only pay 2,754 for the next 40 years. So somebody who is 50, where most of you are, if you take that policy today and you take the platinum one, you'll find you pay 16,000. But still you can even take silver, which is about 9, which is 21, somebody who is 50 will be 9,000, and or 12,000. But you can graduate it as you go on. You don't have to start it at that level. So you can take a 1 million one and 3 million one, and then start pushing on for the remaining period. The idea is for the remaining period. Go to the next chart. These charts, these are available. You can look at them at your own time. I took mine at 59. That's when I was leaving RBA. And that means I was to pay 282,000 for 1 year, which was left to reach 60. The idea behind it is to accumulate about 2.5 million to buy a policy. Okay? But that's why you start. If you start at 20, by the time you work, let's say at the same salary, no change, you'll have accumulated that. And that money normally is invested at an interest rate of about 10% or so, which is supposed to be enough to buy a policy. a policy will go for about 100 or 200,000. And what I noticed that at that age, once you reach 59, then you can see that you have to raise quite a bit of money. So it means that if you get your gratuity at that time or when you're leaving, please buy a policy if you don't have a post-retirement medical cover within your own organization. But if you buy a policy, it's much better than not if you don't have one. So what I would like to urge all of you, even for your parents, there is a senior policy for senior people above 70. I bought for my mom when she was 70-something, and she's still on it at 86. She gets sick every now and then. Take her to Aga Khan, 3 million is paid for. Right now, the premium has been growing slowly from 140 to about 400,000. But 400,000 is still better than paying 3 million if somebody gets sick. And you can't do an arambe for some of these people. So if you can get that policy for your senior citizen, it will be very, very useful for you to do that. So I advise that you should be able to have a post-retirement medical cover because it helps, and I wanted to give reasons for that. I had a friend who was sick, and he has a vehicle, a BMW and whatever, but he was supposed to go for operation at Nairobi Hospital. He was not able to go in good time because we had not raised the money of 500,000, and he passed on. After he passed on, now we had to bury him, and we had to do an arambe. So we collected 3 million. You see what happened? How much did we need? 500,000 for him to go for an operation. But because we didn't do it in good time, I mean, people ask for money, you give 2,000. But for funerals, you are very good at giving. We collected 3 million to bury the guy. So I always say, if this guy had a medical cover for himself, that would have really helped him, other than waiting that you get sick, you have this much. Because you can't turn that cash, that car you have into cash. All the properties you have, you can't turn them into cash immediately. Because you go to Aga Khan today, if you don't have an insurance card, they'll not look at you. They will not. They'll say, okay, you pay, and after a very short time, they'll call on you to continue adding money. In 2006, I went to Chile. When I was in Chile, I became unwell when I was there. And I realized that when I was going to the washroom, I was releasing blood. So I realized something is wrong. And then, you know, when you start releasing blood, and then you start becoming anxious, you go back so often to check whether it is cleared. But it was not clearing. Then I was getting tired. And then they brought a doctor who was speaking Spanish, and we could not communicate. From there, I was going back to Spain, from Spain to London, and back to Kenya. So all the way I was coming down, it was quite a challenge that I was getting tired and still going to the washroom to check if the thing had cleared. When I came here, I saw my doctor, Professor Gengo, he has the university. Then from there, he looked at the report, what I told him. He sent me to Aga Khan to another professor there, Professor Yonga. He looked at it. And that one also decided to send me to Nairobi Hospital to go and see Professor Gutu. You know, I have to talk about it because it's a reality. So Gutu looked at me, and then they realized I had colon cancer. Okay? And you know, when you hear you have cancer, the first thing you think of is death. These days, people don't got cancer and they just look at them because all of us have cancer, but it mutates differently in people. It's not that if you have cancer, that's the end of life. All of us have it, and maybe if it's found in good time, it helps. So they decided that they'll do an operation, which was done by Professor Aduok. He's a Sudanese, but he's at Nairobi Hospital. He's a very senior doctor. For about 7 hours, I was told 7 hours because I was not there anyway, during when they were doing it. I was not there, so I don't know whether it was 2 hours, 3 hours. All I was told it was 7 hours. And then what they did is, and that's now the surgeon was telling me, he's also an artist. That is his passion. Apart from being a surgeon, he's an artist. You go to his office, he's permanently drawing. So he told me, do my intestine, the big one, and then cut it from one corner to the other. Okay? So he told me now you'll have half the colon that most people have. And then now they joined it to the anus, at the back, because they have cut it up there and removed. They removed a tumor of almost the size of an egg, which I didn't know I had. And later on I asked myself, what were the symptoms? It was just gas and all those kind of things, and antacids and everything, the normal things. And I feel that when I eat this food, it doesn't work. If I eat at home, maybe it works. So for a long time I didn't know, but they told me it was like 1.5 years. So they removed it. After that, I went for an oncologist, checked, and then basically after that it means that every year I'll have to go for a CA check for almost 3 years. I went for the first 3 years, and now I go 5 years. So it means I had to have some medical cover or something to treat to make sure that I do have that problem. So it really helped. By that time, Masila was still employed, and the RBA paid for most of that treatment. But after that, when COVID came, we were the first guys who got COVID, when nobody wanted to touch you. I got it, I think, when I don't know where I got it. Then I came to Aga Khan, it was full, because there was no place. Then I was taken to Karen. The advantage, I was taken to Karen, spent 2 weeks there, because those guys were coming in white, nobody would touch you. The only person who was allowed to see me was my youngest daughter. They say the young people are not as affected as the older one. My wife could not come, and the rest. And when I left, stayed for another 27 days in the house, and you're being given food down over the door. They give you food like this. They give you food at the door, you take, you eat, it's put in a paper, it's thrown away. It was a challenge, but went through it, and that was about 700,000, and was paid for by my post-retirement medical cover. Then finally, in 2022, September, and this is why I told you people to stand, I got sciatica. You know what sciatica is? A very painful thing. Most people have got it. And it comes as a result of sitting for many years. As a professional and my background of being CEO, half the time you're in meetings. It affected my right leg. And it's just a one-off. One day it happens. And it's not something that will happen slowly. Just comes once and hits you immediately. And you realize you can't walk. And then I went to Aga Khan and Dr. Fazal. They did an operation there. Okay, what was happening is vertebrae 4 and 5 were pressing on the nerve. And that's why I could not move this leg, 4 and 5. So I think he's managed to split it. And the next day, in the morning I woke up after the operation. I wanted to go to a showroom. I was not sure whether I'll walk, but I found myself walking. So he came in the morning and said, yeah, what I did, I wanted to know that blood now flows. The blood was not flowing to the toe. And I didn't know that his worry was not my spine, his worry was even the toe. Because those spinal surgeries are very dangerous. Because if it's not done by the right people, it becomes a problem. My doctor advised me, take your time before you do it. And when it was done, it was about 600,000 or so, and it was paid for by my post-retirement medical. I have not paid, and this policy I took is for life. It's for life, one-off. So I paid about 2.5 million for a pension premium for life, me and my wife. So since 2017, we don't pay any premiums anymore. Okay? Because I already accumulated, and that's why if somebody takes it early, you'll accumulate it, and you take it. After 60, you don't. But before that, if anything happens, they will refund you the money or the balance. But if after 60, it matures, and we are both covered. So I have a card which shows the date was started 2017, but the expiry date is not there. This is the day I expire. You know, most of your cards have expiry date. This one has no expiry date. It's the day I expire. And that one is a different story. So at least that helps. And when my wife had an accident, she was also treated with this post-medical medical cover. So if your employer has it, it's something you should give a lot of support, and because eventually when you're out there, you realize that that is the most important thing in retirement. Number 2, you can write. So I'll try and be 15 minutes. The next thing that you need in retirement is liquidity, cash, not assets. Cash. And I say cash, and that's where now pension comes in, a drawdown comes in. Because immediately you stop working, that net salary which was landing in your bank account disappears completely. And you're used to get it for the last 40 years, like some of us. Then you go to your account, that money is not there. And that's why pension comes in. So assume you don't even have a pension, and you just retire, there's nothing coming in, becomes a big challenge. Pension itself is very little. That's what I would say. Pension is like 10%. with all this investment we are doing or whatever, it is no more than about 10%. Most people, even I too, if you put in 12 million, because I know it, of people, the ones who, some of us who have pension with insurance companies, 12 million will only give you 100,000. And that means your pension was like maybe 18, because you are given a third. So it means that if somebody today has 12 million or 18 million accumulated, one third you are given, which is like 6 million. So 12 million is only going to give you 100,000. And most of us are not at that level. So even if you take half of that, it means that if you have 9 million today accumulated in your pension scheme, employer and employee, you will only be paid, you'll be getting a pension of about 90,000. Okay? Because it means that, first of all, if they remove a third, then they will reinvest. That 9 million is what they're going to put in for your, buy your pension with. So they do 10%. So most people are just getting between 50. If you have 7 million, you only get about 50 to 60,000. And if you look at that compared to your net salary that you used to get before, it's nothing. So before you reach there, it looks as if you're going to get so much. But immediately you retire, you realize it's not really helping you. That's why you have to do something to supplement. And maybe that's why there's a need even to boost your pensions. Because at least it's better than nothing. Because if you have nothing coming into your account, it becomes a very, very big problem. And some of us who are CEOs were even spoiled. Because in my office, I used to get all the newspapers, Nation, Standard, Financial Times, Kiswahili, all those Harvard papers. Immediately retire, hakuna. You have to buy 2 papers at least. And you know you're not used to buying things because they are free. I had security in my house. The day I left, it was withdrawn. Because the government says they never budgeted for you. They budgeted for the position. They are paying the position. So I always ask myself, when they are withdrawing it, you know, when I was a VAT commissioner, you know, you have so many enemies. Then they put security there. Then when you retire, they withdraw it. Those enemies go away. That's the time they come for you. That's why you find if you're a senior policeman, they never live long after retirement. Because guys who are going for them are many. So those things are withdrawn. Those are things which go with position. And once that position goes, those things also go. So you need to make sure that you have some cash, something which comes in every month, and at least it will help you buy little things that you need, especially at retirement, because if you don't have it, it becomes a very big problem. There was something about IDD that I had the other day, which maybe but I saw most of your people looking at it here. This person wrote to me saying that he used to get 71,000 per month. Then I think it was at 15% maximum, I think. Then it was reduced because I think it goes down. It was reduced. Yours seemed to be going up. It was due to about 60 something. Then finally, now the other day, he was told it has gone to 50. You know, when you retire, you don't expect your pension to start going down. You know, it's like a Batina Sibu. Like somebody will tell you that your pension today, things went good, it's up. Tomorrow, the economy was bad, your pension has gone down. The worst case scenario, you won't get the same amount without it changing. So it had gone back down to 53, and I sent that note to the CEO of RBA that this guy is asking why his pension is going down. Instead of going up, you'll even prefer it to. It can be a big challenge if not properly done. If you take an annuity, it's different. An annuity, you know, is a lifetime. Okay, you get one figure if it's fixed and it's for life. Some of us took that because that's what the best at that time. You had got one figure. I know it might not be going up, but it's the same. Some people could take index, which grows slowly, but those ones again start very low. But get something that comes in every month, because that becomes very important. Number 3, I'll have to rush because of time. Please don't go into retirement with a loan. You will never pay. Nobody should cheat you, will pay. Some of us are consultants. When you do a job for KenGen, they take 6 months before they pay you. You know how people work in government, but KenGen, I think, are different. So you consult, I consult, and it takes very long before you're paid. And it becomes very difficult for you to pay these loans. So just pay off. If you get that lump sum, please try and pay off all your loans and start afresh. Because I saw cases where people say, no, I'll make some money, I'll do it. Then with time, yes, problems come, because problems are always there. You start eating into that money, and before you're long, the money is gone. And people go through a lot of frustration in retirement. There's a lady, because a lot of stress happens in retirement, which I'm going to tell you, especially for the men. A lady, a professor I came with from Nakuru, and so come back to Nairobi, she told me, Daktari, some of the things you are saying, I think my husband should have been here with us to listen to this story. I said, why? My husband has become stressed. I said, why is he stressed? This guy never used to call me. He used to call me once. If I call him, he's busy. Now he calls me 10 times a day. No? And I'm working. Yeah? He thinks I'm not working. He calls 10 times a day. Over the weekend, he wants to take me to Chamas, to sit there, wait until I come out. So he's become stressed. You know, women are the way they manage themselves, but men, no. We have a lot of challenges. So most of our friends we have here will not be there, especially for the judges. When I was talking to them, theirs is worse because they are together so much, and when they retire, and that's one of, in fact, the only judge I know who was doing well is Justice Mwera. I talked to him and he was saying, yeah, at least he mixes with people. Most of them don't mix. So when they retire, you go alone. And you go to the village, who knows you? Those guys don't know you. So it becomes a very big problem. So it becomes an issue that must be addressed because this is a reality that people find that people, especially after retirement, professionals, they don't live long because they can't survive in retirement. So that is something that we have to address, but I'm going to talk to you more about it. The other thing is number 4, please do something. Start a business or something of your passion. If you're an artist or you would like to do something that you're doing, sorry that today we don't have the time, I would have shown you a video that you can still become a billionaire at 80 if you do your passion, because this is maybe what you're doing, but there's something else that you would like to do, or your parents used to tell you to do, you can add value. So do something of your passion to keep you, because if you don't have something to do, you say idleness is a what? Normally idleness is a workshop of a devil. You know, when you're idle, like now when I retired, I was very busy, we were now 5 up to whatever. So all of a sudden now I'm at home. Okay, I started doing my consultancy. My wife now will come ask me, what's my program for tomorrow? Which she never used to ask me. Because now I'm here, and yet I would go and leave. What is your program for tomorrow? Then you say, okay, I'm going to teach somewhere. Then what came to my mind, when she goes to work, that time she was working, now she's retired. She thinks, I've left my husband there with a maid, just the 2 of them. The whole day, what are these guys doing? Just the 2. So you know, in the devil's mind that this guy is idle, idleness. Because, I teach once, I teach at the university in the evening and whatever. The other time, we're just sitting there. So you have to look for something to do, or come out, go to the club. And you go to the club during the day, most people are not there. You wait for them to come in the evening. So when you sit in parklands, you go there, there are very many old people waiting for others to come from work. to come and join you. Because retirement is not that easy. A friend of mine, he's got a hotel in Nairobi West. His children have gone to the US. The wife also joined the children. They go and look after the grandchildren. You know, when you're old, your wife goes. He lives here alone. So the guy is alone. He has a farm in Central Province here. But the children are not there. They're not even interested in what he's doing. He calls them and says, no, you go ahead, sell the place and eat it. So you find that men are left behind. They leave you behind. They have gone to look after your grandchildren. You are here. So these guys go through a lot of stress. So they have money, but the money is not helping them. Okay? They have money. But what we discovered is, in old age, the male gene, that the doctors even told me, the male gene in women becomes stronger. While the female gene in men, that's what now becomes stronger. That's why women are stronger in old age than men. You look at our mothers are the ones running the homes. These guys just follows. So now it's like, yeah, you had your time to be in charge of me. But now I'm in charge. So you follow what I say. So when you get old, your wife will become stronger than you. So you must start thinking, otherwise you'll be left behind. So when I was teaching this at JKUAT, Another lady, I asked her, okay, I talked the same thing. She's also a lecturer. I said, now, why should women leave us here and go abroad? He said, you know, you men are boring. Then another one I talked to her, he says, no, every animal must change an environment. So the environment has to change. So things become very different. And I see this, I lecture at the university. Most of my students today doing masters and PhD are ladies. 75% at the University of Nairobi, because I lecture both masters and PhD, are ladies. The men are not there. We failed somewhere to mentor our sons. We focus on the room, a child, girl child, force them to do so many things, housework, most of the things they do in the house. Your sisters do everything. So they grow out becoming stronger. And our boys, what we do, we give them a ball and a computer and sit somewhere and we call them daddy, papa, all those names. Nothing else that they're doing. So today you have children who are 40 years staying with you in the house. And you want them to go away. To go where? And the house has water, food, everything. Where do you want them to go? They're not worried about marriage. They don't even want to marry anyway. The children will eat what? And they know you have something. A friend of mine has a building in Upper Hill. His child of 10 years was asking him, what's my share in this property of yours? So, you know, he started asking, why? You know, I don't trust my brothers. So you can see where he's saying. So you are the gatherer, you gather, they will scatter it all. So I always say, as you go to retirement, please move all your assets towards cash. It's easy to distribute cash than property. Because I've seen somebody who had cash, and somebody who had a cash and a house in Runda. The cash was about 8 million, so the children, that was easy to distribute equally. But the property, the rent, everybody wants to go and collect rent. You have 4 children. May I collect today, the other one tomorrow, so that even the tenants get tired. Then the house is dilapidated, it's just running down. Yet you had worked so hard to bring up this house, and now they're not taking care of it. But if you move it, add a plot, and just try to sell it and put the money in bond, and I get the interest. And I said, the interest I get from bond, I eat it alone. I don't give it to anybody. It's my money. They can wait for the principal. They can wait for the principal. Whatever comes from interest, and you know, good thing about bond is quiet money. Quiet money is the best. You know, if you run a business, everybody is chasing you. But if you put the money in a bond, who knows you put it there? Nobody. And then if you get infrastructure bond, it's even better because there is no tax. The KRA is not around you. So it comes twice a year, and it comes quietly, and you eat it quietly. And you wait, you're almost 70. When you're going is nearer, why should you bother? They can wait for the principal. Because now where you're going, most of these people, I say, invest in your children. Don't invest for them. You invest in them so that they can improve themselves. But if you invest for them, they'll be waiting for you to go. Look at what's happened in a place like Kileleshwa. Those were government houses. Those houses, those people, as children are selling, putting up houses. And the problem is they are selling everything. So all these things you are acquiring, they'll distribute them. And as I say, some of these lands that we buy everywhere, please try and now consolidate. And what I always say, once you reach this age, there are a few things that I want you to do. Let me show you. At 50, when we reach this, please start downsizing, reducing what you have, decluttering. Because if you go to my house, my suitcases, suits, I don't put on those suits anymore. Because when you're a CEO, you buy suits here. Even ladies, you have go to your drawers. You have so many clothes which nobody is putting on. So you need to start releasing them. Take some to the church somewhere. Because if you don't, a friend of mine before he died, and the following day, the ladies went to her drawer to remove everything. Everybody is picking what they want. But when you start distributing them yourself, than keeping so many shoes which you don't put on. Yet some people don't have shoes. See what you can do. If somebody comes to your home and he doesn't have socks, and you have to give them free, start giving things free. Because you are not going to put them on. You are putting them on when you are working. So start downsizing, decluttering, reduce your desires, reduce cases that you have, those cases in court. So see if you can sort them out so that you don't have court cases at retirement. So downsizing, decluttering, reduce your desires, reduce your worries. These are things that I would like you to start thinking about. And then also, for men, we have a very big challenge. After 65, we always have enlarged prostate. It normally comes automatically. Okay? It just because, you know, the body changes. It has nothing to do with, you know, when you get to, just like getting beards, getting what, it comes with age. So at 65, prostate comes in. And we have a challenge at that age. You find that when you were young, you would go to a playground, and you're playing football, you feel like urinating, you go and stand in a corner, you remember? And you shoot. At old age, you go to the washroom, nothing is coming out. You are holding the wall like this. And nothing is coming out because it's blocked. And most of the men, they think that they're strong. I always advise, don't take Viagra, you will die. If you want to see feeling that you are strong, you better see a urologist. Ladies see cardiology. They have a gynecologist who have been attending to them, and they're able to manage themselves. But men don't. So we try other things. But we have urologists. We have Professor Magoha, who was one of my lecturers. He said that's the biggest problem they have. People don't go to them. They can help you improve your libido, manage your prostate, whatever. Because at that age, it's automatic. And you must prepare for it. And if you delay, it can become cancerous or not. So if you can see your urologist, he used to call himself plumber. That's what Professor Magoha used to call himself, a plumber. That he'll be able to assist us in that age. Because at that age, you're not the same man who used to be. Your wife is not the same lady she used to be. So don't expect her to be as active as before, and vice versa. Because at that time, you're just like brother and sisters. Because you see, I have a house in Rundai. When I was building it, I had children who were going to school. So everybody had like a room and self-contained and everything. Today, only two of us with my wife, because everybody has gone. 3 rooms are locked. You come to Runda, most people, because young people can't afford those houses anyway. 80% of people living in Runda are old people, 70 and above. The children are not there, they have gone. So when you are left, the two of you, chances of you disagreeing, because it's very high. Because the children are there, it was easy for me to send a child, go and bring that. Today you send your wife, go and bring, she sent to you, and the one you should go and bring. So, because you're more or less, you're the same. There's no big deal. So she's one going to say, please bring this thing, which you are not used to. So it becomes, it's not about the money. Retirement is not easy. Because it has nothing to do with cash. Yes? Because even what we eat, two of us, is not much. You know, you would ask yourself, how much do we eat? You buy one kuku, you eat it for almost a whole week. You know, you go to those Gidagora, they say they cook for 1,300, you eat it for a whole week. So you don't really need much. But all you need is a way, and I always say number 5 item, which I think the CEO also talked about, please be close to your family. Because at retirement, when I was CEO, I used to have 2 phones, or commissioner. They're all ringing. Today, even my phone here is not ringing. Nobody is calling me. And if you see a message coming in, it's promotion. Somebody is selling this, he's selling that, selling this. There's nothing. Those are the things you see, you know. But the people who used to call me now is my wife and my children. And if they didn't get used to calling you those days, do you think they start calling you when you're old? I saw people looking after cows here, and I was talking to another doctor. I said, you know what? When you have reached that age, you are left in the village with the cows, you start giving them names of your friends. Because they're not there. So one of them will give it Ernest, you know, so you to remember that guy. Because your wife is not there, you're left with cows. You know, you talk to animals. Because the animals also understand what you say, you know. Because those are the things you are remaining with. So try and be close to these people. Because you're not close to them, they will go away, they will leave you here. So please, let's do something. And make sure you're close to your family. And that's, I always say, you have to be very close to God, because where you're going is nearer. And I think I'll have to stop there. I don't have the time. Thank you for giving me the time.
I wish we had more time for you, but the nature of the meeting has limitations. But what Dr. Edward has talked about is true. That's his life. Our paths cross sometime in our aging life. And what he's speaking of, he speaks of it everywhere. So please take it seriously. At this point, I think, members, we are now we're getting to the end of the AGM. So we had promised you will have a Q&A session. Kindly allow us to start by taking questions from our physical audience here, then move to those received from the virtual audience. I request those asking questions to please state their names and then ask the question. Virtual questions?
Thank you, Chair. We have so many questions on the virtual channel, and most of them have been answered by the team that is handling them. But I'll go through a number of them. There's one from Nixon Kamau requesting us to elaborate further on the evaluation of the property for the DB fund at 4.6 billion. If the same was valued or is historical cost, I can confirm that we value our property every year, and this valuation is independent valuation as at 31st December 2024. Then there's a member who has requested or asked if we have a medical scheme for retirees. Yes, we do have a medical scheme for retirees, but it's self-funded, and we have with a number of insurance companies. That is Equity, we have Jubilee, we have UAP, and we have from First Assurance. Can a member opt for, there's also one most likely to share this information with Beatrice. The member wants the personal financial planning to be held offline, not at the station, and be somewhere separate from the station. So we can consider that because I know it has a budget implication and also the lot issue. There's also a question about from Michael Mwambile asking about the double-digit return from the scheme, and if we are able to maintain that. I would wish to confirm the same came from the good performance from the fixed income instruments and equities. We are working hard to ensure that we give double return to our members, and from our diversification strategy is something we are looking forward in the future. There's several questions which have come on about the loans. Members have given loans, our members taking loans. So one member asked, if they take loan, must we send the money when they retire through the circle? So in short, this member is intending to run away with that money. And the question is, should we help him to run away with the money? Unfortunately, the regulator does not allow us to assign money. So we will not help you, but we'll do the right thing just to pay you. But we request you to clear your loans, as the Dr. Odudo has said. There was also a question from Jeffrey Macau about if he has children, his children are above the age of 21, and he's a member of the B scheme. In case of death, does it mean that the pension only goes to the spouse? The B scheme is a promise to take care of your kids up to the age of 21 and take care of your spouse and yourself when you're alive. So if the children are above the age of 21, that promise does not exist. And if at that time you are dying, your spouse is also not there, also the promise does not exist. So it's you being alive, your spouse also being alive, and your kids below the age of 21. The last question is from George Molombi. Can the scheme withhold members' benefits on behalf of this sponsor due to a loan? I would wish to confirm no. So there are so many questions about member taking loans and running away with money. Unfortunately, we are not helping members to run away with the money, but as I even discussed, we will be looking forward to educate members more, especially for members about to retire, to ensure as they take loan and the people guaranteeing them, they should be in a very good arrangement to ensure that they don't suffer some difficulties due to the loan being crowed from their end. So, Chair, those are part of the questions. We have more than 33 questions, and all of them have been answered by my team. Thank you.
Thank you, Josephat. And members, please feel free to ask questions, not only today, but always in the Secretariat. I wish now request the Trust Secretary to read out that one we have done. We need to adopt the chairman's report and the trustees' report indeed. I now beg to move that the chairman's annual general meeting report, proposals, recommendations, and presentations made by various stakeholders be adopted to form part of this meeting. I will need a proposer for this. And please, if you propose, give us your name, and the person that seconds also gives us their name. Just indicate by a show of hands if you're willing to propose. There's a hand.
My name is Beatrice Koske. I propose.
Thank you, Beatrice. There's a second up front here.
I'm Julius Odube. I second.
Thank you, Julius. Now, ladies and gentlemen, as we come to the end of the AGM, I take this opportunity to convey my deep appreciation to you as our members and pensioners for always honoring our invitation to the AGM. To our service providers for your constant support to ensure that our members receive only the best in their retirement. The ever-dedicated secretariat team and the team here at the central office for showing up in large numbers as you have done. Thank you very much. At this point, I will also ask that we take the third poll before we reach the conclusion.
Thank you, Chair. We'll be doing the last poll for the DB scheme before we go to the AGM for the DC scheme shortly. And the poll, why have you not nominated or updated your beneficiaries with the pension scheme? Why have you not updated or nominated your beneficiaries with the pension scheme? First answer, it's against my belief. Fear of information being disclosed to a third party. I'm still young to nominate my beneficiary. Fear of death, not applicable. I have nominated or updated my beneficiaries. Why have you not updated or nominated your beneficiaries with the scheme? First being, it's against my belief. Fear of information being disclosed to the third party. I'm still young to nominate beneficiaries. Fear of death, not applicable. Jeremiah, you can post the results. Thank you. We can confirm we have done well. 93% of our members have updated or nominated their beneficiaries. 1% still believe that their traditions or belief does not allow. Fear of the information being disclosed, maybe somebody has more than one or two, so information can be disclosed to either, that is 4%. 1%, they are still very young to nominate their beneficiaries, and 2% fear that if they nominate their beneficiary, they might die. So, Chair, we still have some work to do, but 93% is a good confirmation. Thank you.
Thank you, Josphat. There being no other business of which due notice has been given, may I take this opportunity to thank you once again for all attending the meeting. We have now come to the end of a very fruitful DB scheme AGM. I therefore declare the meeting officially closed. We shall now take a short interlude of 5 minutes before shifting gears to the DC AGM, which will be officiated by Ernest Nadume, Chairman of the DC scheme. We hence request members joining us virtually to remain logged in and enjoy our interesting documentaries during the break, demonstrating our zeal towards comfortable retirement for our members and their beneficiaries. For the senior citizens who have joined us virtually but did not join the Internal Income Drawdown Fund and are members of the DB scheme only, you may opt to join the DC scheme AGM webinar, or you may leave at your own pleasure. For those who are here physically, we invite you to join the DC scheme AGM and therefore thereafter break for lunch. Thank you, and thank you again for being here with us today and helping us have a very effective AGM. And thank you for all of you who did presentations, and especially that very candid presentation from Dr. Odundo, and that we all were captivated by it. I trust that we shall be able to interact with Dr. Odundo in future because he seems to hit home with this message. But at this moment, I just thank you trustees, thank you members, thank you service providers, and thank you KenGen for hosting us in your lovely 6th floor. Thank you.